I'm speaking in Spanish. The session will be delivered in English. If you need translation devices, you can find them at the back.
Translation device because this panel is going to run in English. So you can grab your device at the back of the stage. We are going to switch in between Spanish and English. So welcome back for our first panel. So today at 11:30 a.m. we will have with our moderator Sarah Corley, Trustworthy by Default, Designing Digital Finance People Choose to Use. The panelists are Alejandro Maldonado Viveros, Florentina Garcia Miramon, Alejandra Cuellen Benitez. Trust is the currency of digital finance. This session brings together experts from banks and fintechs to discuss how transparency, accountability, and user control can help people confidently choose digital financial tools and how open standards make that trust possible. So a warm welcome to our panelists. Thank you.
There you go. Hold up the walls, hold up the walls. But I won't spend my nights here waiting for dear love. Dance with the walls, dance with the wolves. Before my nights begin to fade into the sun, fade into the sun.
Hola, good morning to everybody. And welcome to this session where we're going to be diving into the concept of designing for trust. How do we be trustworthy? My name is Sarah Corley. I am the CEO of the Alliance of Digital Finance and Fintech Associations, and very passionate about driving responsible and inclusive digital financial services, along with our 40-plus association members covering 50 countries across the globe. Thank you very much to the Interledger Foundation for inviting all of us to be here today to share this important conversation with you. And we really hope that you take away some key notes about actions and things that you can do that really support designing for trustworthiness. We are seeing that digital financial services, the usage is increasing across the globe. The COVID-19 pandemic also helped spike a usage in digital financial services. However, we are still seeing that trust remains fragile. We are seeing that although usage and in terms of access has increased, often we can also see that access is not necessarily as meaningful as it could be. So for example, think about remittances, where you might be in a different country or a different part of the country, and one of your only options is to send money digitally, but when the user receives the money, one of the first things they do is cash out and then use that cash. The transfer itself was digital, but then the rest of the money remains back into cash. And so we're not really creating services that really meet the needs of the users wherever they are in the world. Transparency, accountability are key things that are important for trust. Are we as an industry really ticking all of those boxes all of the time? How are we making sure that what we design meaningfully benefits the end user? That it's not because we had a great thought for an idea that would change the world, but actually we saw a need in the market and decided to try and do something to meet that very need. How can we design and build services that are trustworthy by design? That's the content for our conversation today. And I'm really delighted that we have experts bringing perspectives from regulator, industry, technology, consumer protection perspectives within the panel today. Let me introduce you to my wonderful panel. First off, we have Alejandra Cuellen Benitez, partner at FinSocial. We also have Fior Garcia Miramon, Executive Director of TechCheck. And lastly, we have Alex Maldonado Viveros, CEO from Fintech Land. So I'm a big believer that we start with a consumer perspective first. That, after all, is the very reason why we're all wanting to design these financial services. So Fior, I'm going to put my first question to you. In your view, what are the most important ingredients of trust in digital finance? And what design principles help bridge these gaps? And is there a difference between like male and female, how they trust, or rural and urban, how they may trust?
Thank you, Sarah. TechCheck is the first and the only consumer organization dedicated in Mexico to strengthening trust, transparency, and fairness in the digital economy across the different sectors. One of them is digital financial sectors. Our work focuses on facilitation of collective complaints, transparency in the economy, and generation of evidence to design policies that enforce our rights. What are the main principles that we identify to build trust in the digital financial services? Security, transparency, resolution, and redress. We want our money and data be saved, to understand what services we have and at what cost, to get quick and human responses when something goes wrong, and of course, if the bank makes a mistake, we want our money back. So to understand these conditions and these principles, how are in Mexico, we analyzed in the last year more than 300,000 complaints filed with Conducef. Conducef is the consumer protection regulator here in Mexico. And what we found is that transparency and security are main challenges here in Mexico. First insight of our report. The clear winner in complaining is, I didn't make that transaction. Almost half of all complaints are for this cause. In traditional banks, the percentage is 75%. Imagine that, how many people is complaining because they don't recognize that transaction. In Fintech, is around 54%. Are we really that careless, or is someone else shopping with our data? Raise your hand here, because all of us are consumers in the digital financial services, or at least I assume that. Who have dealt with non-transaction in your bank? All of us. Sometimes we cannot even follow our own transactions in banking apps. It's hard to keep that when banks can charge you around more than 16,000 commissions. Yes, that's the number that the central bank have approved for the different commissions here in Mexico for consumers. The second insight of our report is that if we file a complaint, the chances of getting our money back are very low. Only 5 out of 100 complaints are resolved in our favor. And talking about rural and urban areas, if you file a complaint in the central region here in Mexico, it's 5 out of 10. But if you complain in the south, it's 3 only. So the inequality also the complaints also come with inequality. Very quick, what are the measures or the main priorities that we identify in Mexico to have these principles in action? First is security by design. Banks should compete not only on interest rates, also should compete on who protects us better. We need more information about how they protect our money and our data. Second, explicability and portability. Talk us in local language, standard, and plain language. And let us move our money without a struggle. And the third priority that we identified is accountability. We need more information to understand how the performance of the banks, response times, system failures, data breaches. If we do that, we will keep not only our money, but also our trust in the digital financial services. Thank you, Sarah.
Thank you, Fior. I think we all needed a reminder at the very early in this conversation of quite how much trust has been broken and how important it therefore is to be trustworthy and design by default, trustworthy by default. So Alex, this is going to be a difficult question for you after hearing those resources, but what does it actually mean to design a financial product or a platform to be trustworthy by default? What is it? Is it the design? Is it the governance? Is it something else?
Yes, well, first of all, I'm very happy to be here with you, and congrats to the Interledger Foundation for the event. Well, I think it's design, it's security, it's how you manage the digital products. But I think in Mexico, there is something deeper, right? And I see a lot of people that they are not Mexicans. So we need to understand what is happening in Mexico and happen in many other countries in Latin America, right? So maybe you don't know, but we have 400 financial institutions, regulated financial institutions, right? We have around 50 banks. We have about 40 SOFIPOs, that are little banks that attend some communities and different sectors. We have 60 fintechs, regulated fintechs that are created to give digital services, right? And many other financial institutions that bring services to the Mexicans. But I will tell some data that it's important to know. You know, we have a national financial inclusion survey that they made it 1 year ago. And, you know, it's like, well, yes, Mexico have financial inclusion, but not. We don't really have financial inclusion. Maybe, yes, in Mexico City, you see banks and branches and ATMs and a lot of whatever bringing services, but in the real life, we have a lack of financial inclusion. So, for example, 37% of population, they save in informal products. What is an informal product for the Mexicans? We said it bancolchón in Spanish, the bancolchón. In English, colchón is bed, is your bed, and banco is bank. So we save under the colchón, under the bancolchón. But other 35% of Mexicans, they even don't save, nothing, right? Important point is the groups and the communities that have the more lack of financial inclusion is the communities that have indigenous language, right? The communities that have less than 15,000 people. You know, these ladies that are selling their products here in the event, their communities are the most lack of financial inclusion. And it's important to say, right? Another point important is the use of cash. You know, we don't know really what is the percentage of cash that is used in Mexico. We said around 85%, 90% of transactions are made of cash. It means that 9 of every 10 transactions are in cash, right? Why? I think we will discuss that in this panel. Another point is the 2.5 bank branches are in the rural communities, right? So that's what I say. In Mexico City, you see branches everywhere, but in the rural communities, you don't see branches. And well, I will finish with this. What is happening? Why is this lack of financial inclusion? It's maybe the digital penetration, yes, because in rural areas, you have a cell phone. Everybody had a cell phone, but maybe you don't have a technology of data and internet, right? The fear of the system at the banks. People have fear because of fraud, because of they don't want to, to get near a financial formal institution, right? The informal employment, it's a very important point. The lack of financial and digital literacy, the lack of financial education. So if we want to design good digital financial products, we have to understand how Mexican work, how Mexican do finance, how they actually have contact to the financial institutions, right? So that's it.
Thank you so much for setting the scene even deeper there for us to actually understand what is going on in Mexico, what the average experience for the user could be like. Alejandro, I want to bring you in here. Financial services are provided by businesses at the end of the day. We have to have a business case to be trustworthy. How do we balance meeting consumer needs, supporting consumers' financial health, but also allowing these organizations to be profitable? Is that possible?
Yes, it's absolutely possible. FinSocial is a SOFIPO, the one I'm partner of, and we actually deal with low-income savings and loans. And yes, there is a business case, and that is, because let's be clear, this is not about ethics versus profits or about long-term growth versus short-term extraction. It's about sustainability versus volatility. And here's in Mexico, in Latin America, and especially in Mexico, fintech and microfinance have been growing much faster than trust. Millions of people have access to financial services, but many still don't use them, as Alex was mentioning. Why? Basically because they don't trust them. And they've seen hidden fees, they've seen complex terms, or products that simply do not fit the reality, as we were mentioning before. Now, let me see what matters for the business. Why do we think that there is a case? Basically, there are three basic things that every CEO always considers. First, consumer acquisition costs go down when you have trust, because word of mouth is still and remains the most powerful growth engine for the financial sector. Second, we have a portfolio increase. The quality of the portfolio increases because if people trust you and if people know that you're going to be there and your product is clear, then the repayment of loans is much better, and the relationship gets deepened with the clients. And third, you have regulatory risk that drops, because if you have less complaints because of hidden fees or because of surprises, then the whole supervision becomes softer, and that allows you to save a lot of time and a lot of capital, because normally regulation takes a lot of high cost in Mexico. So if trust lowers cost and stabilizes growth and protects the institution, then it's not philanthropy. It's about risk management, and that's why I think it becomes very, very useful. Now, transparency is not about just giving your clients a full set of information with all the conditions. It's about talking to them in their terms, in a language that they can understand. And what we've learned at the SOFIPO is that the best trust-building tools are clarity and proximity. And let me give you some examples. If you have a simple interface that shows exactly what users will pay or will receive, or if you have loan simulations that explain the impact in pesos and not in percentages, or if you have real notifications that confirm every transaction, then people get used to it and become trustful and trustworthy with your product and with your application. These small design choices make a huge difference. Even if it sounds like very basic, it reduces anxiety, the anxiety of the user, which is like the most important enemy of inclusion. So you just basically, if we sum up, have to institutionalize transparency and don't leave it to marketing. It's about a part of governance for your entity. Then you have to give users control over the data, because data protection is not just about compliance. It's about trust. It's about empowerment of your client. And third, you have to align the incentives with the client well-being. You have to look for the client to have a better outcome, to have a credit that works for their needs and can be repaid. And that allows you to have stronger retention and not just a lot of transaction volume. From a policy standpoint, because this is not just a private action, we need a regulation that rewards transparency and responsible innovation and not just punishes failure. Because at the end of the day, trust is capital, and it's built and has to be built deliberately for the whole system, not only to punish the one who doesn't work, but to understand it through interoperability, clear standards, and user control. That's what will make a Mexican system more inclusive and more responsive.
One of the things you said there really has struck me, and I never really put this together before until right now, so thank you, but trust is like risk management. So if we think about it from a user perspective, if we make it easier, simpler to understand, you're taking the risk away from the consumer. They feel more comfortable, therefore they're more likely to use and reuse and recommend, and that's customer retention and acquisition. If we think about risk management from a regulator perspective, if you see consumers using your product and not complaining, you're seeing compliance. That is also building that trust there. And then from the organization itself, building that trust actually creates cost efficiencies, with that customer retention and customer acquisition. So really it's important for all three angles that we often talk about, the consumer, the organization, and the regulator. So that was something that really is quite powerful to think about, how important trust is, not just for the consumer, but also for the regulator and for the organization itself. So I'm going to stay with you and ask you a second follow-up question, Alejandra. Startups and established players, we all need to innovate and do new things. And new things can bring new risks and new trust issues. So once we've built up trust for what we're currently doing, we then have to think about that future. And confidence can be really undermined if the new innovations don't go well. How do we balance the need for innovation and trust?
Well, in the financial sector and much more in the digital financial sector, as you know, innovating feels like changing the engine in the mid-flight, and you know that you cannot crash. You can't afford to crash, but you still need to make the change. So what we've seen in the region, the whole Latin America, and now every time more in Mexico, is that the region is moving very fast. Startups are testing new models almost every month. And even traditional institutions are really reinventing themselves. However, when something goes wrong, when an app turns off or disappears, when there's a data leak or a product misfires, that affects not only that company or that app, it affects the whole system because it becomes a problem. It affects trust for the whole ecosystem and for the whole management of the digital system. So the question is, it's not how should we innovate or not. It is how we make sure that innovation doesn't come at the expense of trust and of confidence. So from where I stand in the Sofipo, that's hard to earn every client one by one. The responsibility of innovation is what keeps it alive. Every time you have to find better ways to get to your client. People trust us when they understand what they are signing, when they feel their data are safe, and when they can count on us to show up, that we will show up tomorrow. So what responsible innovation is not about slowing down. It's about building guardrails strong to let us move faster without fighting or falling off the cliff. What do? We have three basic ideas that have worked very well. First is to design with clarity. If a user can't understand your product in one screen, then it's not ready. No, it's not ready. Complexity kills trust, and you have to simply go back to your lab until your product is ready. Second, you have to, or what works very well, is to share responsibility early. You have to bring your regulator, your clients, your partners into your pilots so that they don't fail and so that the conversation doesn't start once you have failed, but before it does. Finally, you have to build resilience, not hype, to scale what works, even if it takes a little longer to get out. It's much better for your company and for the whole system to wait a little bit. At the end of the day, in finance, durability beats speed every time. It's not about being the first, but being the best. At the end of the day, this is not about moving slower, it's about moving smarter. And every time a fintech, a bank, or a SOFIPO earns and protects the user confidence, then it lifts credibility for the whole system. And we all have to think in that terms or in those terms. And because in digital finance, the real innovation isn't technology itself, it's trust at last. And that's why also regulators have to be particularly careful now, in Mexico at least, with all these fake financial institutions or financial applications that are damaging the whole system because they haven't been either seen by the authorities and they create big, big leaks. That would be.
One of the points there really resonated with me. I remember chatting to a fintech, a very successful fintech CEO, who said, if I have to teach the users how to use my product, I've failed. I shouldn't have to then have a financial literacy program that runs alongside my product. And people can be quick to jump in with technology as an answer, but actually it doesn't solve the need that was there. It was an idea rather than actually meeting a consumer need. But we know technology is an important driver for innovation. Without technology, we wouldn't be where we are in the world with as much financial inclusion as we have achieved. Certainly things like the digital payments that are happening around the world, technology is the underlying important factor for that. So Alex, I'm going to come to you and ask you a technology question. Are you ready? So how can things like open standards, infrastructure, data, the interoperability of payments, how can we use technology to support greater trustworthiness?
Yes, it's a very important point. Alejandra was talking about innovation. I think we have to talk now about disruption. The commercial banks that don't have a mobile app, they are out of the game. No, we have a fintech law. We have 60 fintechs in place that use technology to bring services to their clients. Interoperability of data and connection and transaction, it's also a very good point. I want to talk about one thing we did in Mexico. I used to work at the National Pension Commission, and we use innovation, we disrupt, and we use interoperability to bring the Mexicans one app, a single app that is called Afore Móvil, to get access to their pension account, to their balance, to their movements. That application is a clear example of how regulators can innovate and do something that operates in one app using technology, but in all the pension systems. So we have 10 pension funds in Mexico, private pension fund, and just one app. That means that you download the app, and this app connects to one of the 10 pension funds. And then people didn't even know where was his money, right? But the app shows you, you are in, I don't know, Sura, Principal, whatever, and you have that amount of money, and you have that balances, and also you can make voluntary savings in your pension fund in the mobile app. Without the mobile app, you can do it, but you have to go to a branch of the Afore, right? So that is a very good example of how regulators can innovate, can regulate, and can do something different using technology. And this mobile app is just, I don't know, maybe 20 million users, the mobile app, right? And it's very recognized internationally because it was a very example of how you can integrate in one technology a lot of financial things, right? But well, we have a lot to do. In Mexico, I said we have the Fintech law, we have open finance and open banking law, but we don't have secondary regulation. And the data that we can share in financial institutions, it's very important to bring users new use cases, better experiences, better products, right? So we have a lot to do. I hope that in the next months, the regulator push and give us the secondary regulation for data, for open finance, for open banking. And we, as technology enterprises, we have to use that interoperability and data to bring users. We don't have to think about, okay, I will give more loans. Maybe, but how we can bring more experiences to the user, right?
Thank you, and it's a really nice segue into some of the next discussion that I want to have, because open finance, open banking, interoperability, it brings enormous opportunities. But one of the things that concerns me about that topic in particular is, consumer recourse and redress. We've already heard how difficult it is when you've sent money or there's an issue with a transaction with one bank. However, with things like open banking, open finance, embedded finance, interoperability, there might be multiple partners along that chain who are involved, and it can be perhaps difficult for the consumer to figure out where to go, who to go to, or whose responsibility it is. So I'm going to bring you in here and ask you, how can we make sure that consumers and the industry remain aligned on actually addressing consumer complaints and redress?
Remain aligned. I think we are not aligned.
Become aligned. I stand corrected.
Yes. And I really like to ask these questions when I have meetings with businesses and financial institutions. If we have here representatives, Ale, for example, how many times do you have collaboration with consumer organizations? Like, you include the voice of consumers in your KYC?
We actually didn't know you existed. Which is great.
So, the industry is not talking to the consumer organizations. And also, I like to ask here to the financial consumers that are here, if you are a member of a consumer organization which represents your voice in front of the industry. No? Follow us, please, in social media, TechCheckMX, for the Mexican consumers that are here.
Great PR.
Yeah, the industries and consumers are not fully aligned yet in consumer resource, so we need to talk more. And we like the idea of open banking. We like the interoperability, and we like all this shiny terminology, but we also like reparation and redress as consumers. So right now, we are seeing that the industry is building the highways to move our data and money faster, but we are not seeing the building of emergency lanes when something crashes. We are not talking enough about reparation in open banking, and we are worried about that. So how we can align consumer resource, how we can promote the conversation between the industry and the consumers. Let's participate, let's give us a space in these kind of forums. Second, create advisory councils. It's important that consumers are there. And third, we need to build evidence together. evidence and insights together. Let's do more projects, research projects together. We, as consumers, we like to move toward interoperability, but we need to make sure that it's not just about connecting our accounts, but it's also about connecting our rights.
I think that's a great point, and it deserves a round of applause. It's not just about connecting accounts, it's about connecting our rights.
Thank you, thank you.
So, Alex, is this beginning to dig some of the problems as to why the penetrations of digital payments are not advancing as rapidly in Mexico as one would hope, or are there other challenges too?
Well, digital payments, I love that topic, because in Mexico we have instant payments since 30 years ago with SPAY. SPAY is our protocol to make instant payments for bank to bank, for fintechs to bank. We have 30 years with SPAY, right? So Mexican, we are using that every day, since years, right? The point and the problem in Mexico is that we don't have a digital payment new experience that you can pay actually without a bank account, right? In Brazil, they have Pix. In Spain they have Bizum. A lot of other P2P digital and instant payments in place. The difference is that they have a good experience at the moment they pay. You can pay in the street, you can pay in the commerce in a very easy way, to a mobile phone, to a email, whatever. SPAY exists, but it's complex to use in the user experience, right? So, and we have also in Mexico, like CODI, Cobro Digital. CODI is, we have around 6 years with CODI, and it's a QR payments. And it's planned for the commerce, right? For the tenders, for the mom and pops stores and the big commerce to pay with a QR. The problem is that it's not easy paying in that way, because you have to open your mobile bank, the merchant have to open also and show the QR, and the operation, it's not easy. So it doesn't work, okay? We have another product that is DIMO, Dinero Móvil. We created with the central bank. It's a better way to pay, because you pay to a mobile phone, to 10 digits, but you need a bank account. So I was saying, yes, that's open finance, because we have a centralized database. When you go to the account with just a cell phone, it's open finance, but it's not open finance, because you need a bank account. You need first to open a bank account. So, but it works, It's more easy than CODI. You can make a demo in a very easy way. But maybe three problems. First of all, the user experience should be easy. Second, the central bank and the regulators should push the use of this kind of payment methods and obligate the banks to have it. And third, search the way of how you can pay somebody. First, the merchants, right? You can pay them even when they don't have a bank account. Also, they need to move the money, and then they need to withdraw the money. But the payment should be the pivot and the first point to then make financial inclusion, right? So, good challenges. Also, I hope the regulators push these kind of methods and detonate the financial inclusion with the payments.
I think, really interesting to think about how important ease of use is for trust. The more barriers that there are to making that payment, the more different steps involved, or the prerequisites like having a bank account that you need to have, the less the more likely it is that the consumer will not use that or will have difficulties that lead to then a lack of trust. So how then, I mean, many of us in the audience and on the panel are sitting in financial organizations delivering financial products and services. How can we measure whether our consumers actually trust us and trust our services? What are the metrics that we can use, Alejandro?
Well, basically, trust sounds like air, but it's not. It's measurable. And it leaves a trail, basically, because you can see how people behave, and you can measure their actions, and you can see and you can feel their feedback. So the trick is how you connect the dots, turning something emotional and something that sounds like air in something that you can really use on a daily basis. So first, on the behavioral signals in the SOFIPO or any financial institutions, people vote with their actions. If they come back after an error, if they keep on saving, if they pay on time, or if they recommend you to others, those are actions that you can measure on a daily basis. And Alex tell us how retention, repayment, referrals are the most honest metrics on trust that we have. And when they go up, that means that the client is happy and the client wants to stay with you. Second, you have to go to reliability and transparency, which sounds like the invisible foundations. However, you can check your uptime, you can see the payment success, you can see what happens when you fix a problem, if you have a problem and the user comes back, the kind of complaints that they have. And here's very important, it's not the same thing to have a technical failure and you correct it than having a surprise fee. Consumers, and that much we know, consumers, they can allow you to have a mistake and they can forgive a mistake, but never a surprise. When they suddenly find a fee that was not expected or that they were not clear that they were going to be charged off, that really creates a leak. Finally, you have the sentiment. You have to measure the trust that they have, that the consumer has on your platform. And you can ask it directly. You can see if they feel comfortable leaving their money there and having their data managed by your platform. That question can be really, really powerful. And it combines, if you combine it with complaints, with referrals, and with all these other indicators, then you can have a chart. And you can really make trust measurable and followable. That's what it matters. You make a dashboard that you have to follow as much as your balance sheet. If you follow it, and then remember that if you measure it, you can manage it. But then also, if you pay your people an extra bonus for following trust, these trust indicators, then it's definitely going to be done. So it's not only about measuring it, it's also like involving your whole organization in measuring and following the trust dashboard.
I love that. Imagine if alongside all the other metrics in your quarterly reports that go to the board, there is a trust dashboard in there. In your annual reports, there is a trust dashboard. It's perfectly possible, as you've explained, to do it. We just, as financial institutions and organizations, need to actually, take those proactive steps to do it and to lead and move forward in that way. And maybe Fior, you can very quickly, because we're coming towards the end of the time, but sort of, is things like trust dashboards, what other actions would you as a consumer association like to see financial institutions taking? So when we sit here or wherever in the world in 5 years' time, that we know things have changed for the better.
Thank you, Sarah. If I can do a wish list as a consumer organization, but also the vision that we have for Mexico, there are 3 scenarios. One, we are more consumers using digital financial services, built global or in our communities. We see hardly anyone in the line at a branch, specifically here in Mexico. If someone here has been in a bank here in Mexico, know how painful is that?
Terrifying.
Second scenario is far fewer of us complain on strange transactions, as we have already said, because the system is more transparent, more secure, responds faster or faster react to when they have problems, and very important, if a bank makes the mistake, we hope to see that it answers with proactivity. So we receive a reparation with that, for that. And third scenario, if a bank doesn't take care of us, we can switch very easy with 2 clicks. Consumers have better information. We can choose with better information, but also we have the power to walk away when we don't feel that they treat us well. Thank you.
Thank you so much. I like that, having the choice and the power in the hands of the consumer, and being able to make choices that resonates with what is deeply important to them and the trust that they feel. That was a great way, and we've only got a few seconds left, so I'm going to just very quickly try and summarize some of our discussion. I think we've heard regulation being really important for not just facilitating the innovation, but facilitating trust, for facilitating services that are responsible. We've heard technology exists. Technology can be well leveraged to be able to deliver trust, but actually it's not always the solution if it doesn't meet the consumer's actual needs. What are consumer needs? How can we design products and services that meaningfully uplift and empower consumers, not just based on an idea that we may have had in a dark room, but behind a computer coding something, right? That's not the purpose. The technology, the regulation, and the needs of the consumer need to really align in order to drive things forwards. And finally, I think it's important to acknowledge that trust, as you said, I think, Alejandra, trust can be broken with one thing. We can spend years building trust, but it can, and use mistakes and can be resolved. Good recourse, good redress mechanisms can help, retain that trust. But if we do something that is not with the consumer's best interest in mind, that trust can be broken. And so we need to be really careful and considerate about how we continue to build that trust. And I love the trust dashboard concept. So that's one of the last things I want to think of. We should all be making sure that in our organizations, we have a trust dashboard, that we know that our consumers are happy and are benefiting from the services that we are providing. I just want to say a big thank you to our panelists. Thank you, Alejandra. Thank you, Fior. Thank you, Alex, for a wonderful discussion.
If you allow me one last thing about this.
Please.
Trust must stop being a slogan to become a policy. And one thing is within organizations, but also at the regulatory level, it can be done. And I mean, there are some ideas. We didn't have time to go forward, but I think that there are ways, and with organizations like yours, it's going to be easier to build these dashboards, not only for internal decisions, but also for policy decisions. And then that can make trust by design as a regional policy.
Yeah, and sorry, very quick. And I think trust is also a matter of time. New generations, they trust because they trust in fintechs. They don't have banks. They don't go to BBVA or Santander. They have Finsus, and they are born in a digital era. So I think also it's a matter of time.
Thank you. And as you can see, we have a lot of passion and a lot of interest to talk about this. So if you want to continue the trust conversation, please come and find us. And we look forward to speaking to you all. Thank you so much, everyone.
Thank you so much. Muchas gracias. Una fotografía. Thank you so much to Sarah, Alejandro, Florentina, and Alejandra. La confianza, entonces, es un tema de tiempo. Nos dieron muchas claves también para construirla en consistencia desde la experiencia del usuario. And I am speaking Spanish because if you need a translation device, si necesitan un equipo de traducción para seguir la siguiente conversación, que será en inglés, you can find it in the back of the stage. And English. So right now, we welcome to our next panel. The name is From Mission to Market, where Fintech and CDFIs align and clash. I want to know more. So the moderator is Casey Dick, Chandra Jacobs, Fence Pierre, and Sheena Allen. I hope I pronounced well your names. If not, you can correct me later. Yes, please, a warm welcome to our panelists. I will say the description. So right now, they are going to explore when fintech's speed meets CDFI mission sparks fly. This candid conversation explores the balance between innovation and responsibility, what partnerships succeed, which fail, and what's needed to build genuine community-centered trust. So welcome, and the stage is yours.
Thank you so much. How's everybody feeling on day 2? Love it. Likewise, likewise. Well, thank you so much for joining this conversation with us. We're very, very excited. We're all hailing here from the United States. Lots happening right now. And we're excited to really unpack some of the mechanics that are happening in the financial services industry. And before I dive in to the incredible stories and perspectives of each of these panelists here, I want to set the landscape for what's happened in the United States over the last few decades, okay, in the payments industry. So between 1984 and 2020, 70% of all banks vanished. Banks, not branches. We had about 14,500, and today we have less than 4,500. And so across neighborhoods, across communities, across relationships with people who would otherwise underwrite your business or fund your next house, we are seeing an evaporation across communities, especially marginalized communities, because banks are vanishing as a result of acquisitions, mergers, and just the lack of bank charters every single year. Now, at the same time, what you have today is a company called Chime that has no branches, but is the 6th largest debit card issuer in our country. They're only surpassed by Bank of America, JP Morgan Chase, Wells, PNC Bank, and the Navy Federal Credit Union. And so fintech is exploding right under everyone's noses, but there are certain sectors of the financial economy that are very important that are threatened to be left behind if we don't figure out how to find them, right? And so we're going to talk about some of the tensions and alignment that exists with an industry called the CDFI industry in America, that is the Community Development Financial Institution industry, and it is much like co-ops or microfinance banks that exist in other parts of the world, as well as your fintech organizations, right, which gives the speed, the scale, the agility that CDFIs don't necessarily give today. And so first, I want everyone to be able to, in one sentence, describe the core mission of your organization and where you see alignment or friction with fintech models today. Chandra, at the end, we'll start with you.
Hello, everybody. I'm Chandra Jacobs, and I'm the Texas Market President for AltCap. So that's short for Alternative Capital. And I would say where we clash as a CDFI with fintechs is basically speed. We are a smaller organization, so therefore it takes us a little bit more time to be able to get those funds. But we're definitely about supporting entrepreneurs in the underserved communities to be able to get their business to that next level.
Thank you so much, Chandra.
Hi, I'm Sheena Allen. I'm actually an ambassador for Interledger, but I also run a company called, a parent company called Cream Factory. And so our focus is financial empowerment across the globe. And I guess we actually clash and collaborate. Clash, definitely speed, and the collaboration part is focus on people who are financially underserved, who don't necessarily fit into the model of some of your larger banks.
Good afternoon, everyone. My name is Fenzi Pierre, VP of Business Development with Lendistry. That's an intriguing question in regards to clashing. With Lendistry, we're a fintech and a CDFI. So in one space, scaling and speed is the gift of fintechs. We're able to help small businesses acquire and have access to capital fairly quickly. Where we clash would be certain markets. Sometimes there's limitation on which underserved communities we'd like to help and we'd like to serve. So that can be challenging, understanding, knowing where the people you want to help and you just cannot give them those resources.
Love that, and thank you all for distinguishing yourselves as either Fintech, CDFI, and we have FinZ that is both. And so I want to double click on that piece with you, FinZ, because you sit at an interesting intersection where you all have chosen to be both a CDFI with that designation in the States. That means that they are commissioned to serve low-income communities, right, and really target marginalized folks with patient capital. You see terms like 7 years or greater. They're the economic first responders, where banks won't go in after a disaster or calamity. The relationships are held at the CDFIs, and they will go in, even if it's costly. But you also are a fintech. So why did you choose that positioning in terms of figuring out structures that help you democratize access to capital? Like, what are you seeing on both sides of those rails?
With our small business owners, when it comes to their growth cycle, a lot of small businesses are coming in that space where they need to grow. Especially in underserved communities, we've heard that there's limited access because of, again, either they don't have the resources from a banking perspective, or they just don't understand how to gain access to capital. Being a fintech and being a CDFI, part A is the financial literacy. So there's the educational piece. We believe in after you educate and help these small businesses understand their business model, you take them to the growth cycle, and then you start to give them those resources, meaning capital, to help them take that business to the next level. What I find is, with small business owners, when you're in the growth cycle, it's not knowing what's next. Right. That's where the financial literacy component comes in. Being a CDFI, having to serve specific markets or going to certain communities and trying to build that up, that to me is the launch pattern of having fintech. Everything's at the access of your hands. All our information can be portable. It can be via web. And then having them understand what we can access, whether it's purchasing equipment or staffing and operational expenses. Not knowing that you can help staff your company to get you more revenue, it's a big misnomer. That educational piece is vital.
Yeah, and it's funny because sitting on the stage, this conversation is so easy to have, right? Just the understanding around why financial literacy is so important, and going slower and being, more handheld is helpful, but obviously the benefit at scale with fintechs. But on the ground, it does not feel that way. Very recently, I spent a week in DC talking with some credit unions and some CDFIs, and the buzzword was, no, it's fraudulent, right, to digitally transform and go faster, and no, we're worried about like security and check fraud, and and I could not find the language or the use cases that are relevant, right, for folks who really prioritize relationships, because capital moves at the speed of trust in rural communities, right, and helping them understand the greater piece of the pie. And so it's beautiful to see y'all demonstrate that, and I want to thread the needle a little more on maybe some of these tensions that might exist, and how you may have found the right language or may have not, right, and have to walk away from some deals when you couldn't kind of get there between fintech and banking or CDFI partners. Sheena, I'm gonna kick it to you. When we think about this tension between mission, which CDFIs clearly have, but getting it to market, right, especially with speed and scale, what is the biggest tension you've personally experienced or witnessed between these two groups? And feel free to use your current, work and even your previous work with the fintech.
Yeah, I think so, too. Number one, with CDFIs, the mistrust that comes from a lot of fintechs is because they're scared that fintechs are going to fail. Because usually fintechs are usually smaller, they're trying to scale fast, they're relying on VC dollars, most are not profitable, so like if I can't raise again, I'm gonna have to shut down. And so the CDFIs are like, I don't wanna put too much trust and too much time into this relationship, and then 2 months from now, 2 years from now, I gotta start all the way back over somewhere else because you've shut down. So one of the biggest tensions I've seen is just that somebody else on the team love it, and then somebody else comes in and like, are they gonna be around in 2 years? So that's number one. The second one definitely goes to just the space being very regulated. And fintechs, for the most part, we are very much we're gonna do it now and ask for permission later. Whereas like when you are a CDFI and you are so into the system of the regulatory way, you're very much like, no, I'm gonna ask for permission and then see if I can or cannot do it. And then if they say no, I'm not gonna touch it. Whereas for us as fintechs, we're like, shut me down, find me, we'll figure it out. And so that's a huge clash. I do think where the alignment, though, is coming is that CDFIs are trying to figure out how do I get not just even faster to market, but how am I going to be able to touch the next generation? Because you have to think, if you look at the average of most CDFIs, I'm sure I'm going to be wrong here, but you're probably talking somewhere around 55, somewhere in that age. We all know the great migration is coming of wealth, great migration of wealth. And so you're going to have, that audience is going to be gone soon. And so their kids are going to be having that money, or their grandkids. And so CDFIs are trying to figure out, I have to serve them, because if you talk about, I'm from Mississippi, we still don't have, we have one Chase that came literally 6 months ago for the first time. We have no Bank of Americas. Like, we only got Wells Fargo because they bought out Wachovia. So where are the people going to have the money now? And we talk about money. We're talking about farmland money. We're talking about the money that the people in the country are going to have. Where are they going to go? They have to go to the CDFIs. So I think they're trying to find that alignment because they don't have a choice and such a huge opportunity that I think they don't want to miss.
Right. And Sheena, can you double click on what the great wealth migration is for those who don't know? Obviously, we talk about it a lot in the States, but can you kind of explain what that phenomena is over the next 20 years?
Yeah, so you have about, I think like 10 trillion, maybe more, of people who are usually baby boomers are up. That's where their wealth is. These are people who have invested in their 401ks, it's retirement, they have made investments, whether it's in land. It's like they held all the wealth. They're the granddads, the great-granddads, and the cycle of life is they're going to pass away. So what's going to happen to that? One, you have some families who, the kids, the grandkids, I don't even want it. Find it, sell it, give it to somebody else. But then you do have a nice amount of people who says, I'm going to pass this down to my kids, to my grandkids. Most of them, this is going to be their first time really truly touching wealth themselves. Their granddad might have had it, their grandmother might have had it, but it's the first time they are going to actually have to figure out, how do I actually navigate the world of wealth? And again, a lot of this wealth is going to come from the countryside of America, where you're talking about people who have 200 acres of land, who now, for an example, Meta came into Louisiana and bought up 400 acres of land. That's somebody's old great-granddad who had that land and just made probably $2 billion because Meta wanted that land for a data center. Okay, what's going to happen when the granddad's gone and now the grandson or the son has to have it? The first time that son's going to be like, what the heck am I going to do with $2 billion? There's no Chase in Louisiana. It's only CDFIs. And so that's going to, you got to figure it out because we're here now.
And that's a good point, because these are two gigantic worlds that are not speaking to each other. So $84 trillion of assets and wealth that are going somewhere. And I think the assumption is that these young folks are going to keep it in the bank, right? When we actually look at what's happening with Gen Z and millennials, they don't want branches. They don't care as much about relationships yet, right? A study came out that said 49% of all black investors are between the ages of 18 and 34. And it is not because an investment bank came and talked to them and said, let's talk about your management fees. It's because Robinhood put it in their pocket. It's a mobile trading app, right? 45% of Hispanic investors are between 18 and 34 in the United States because fintech is coming to them first, right? And the numbers as small as 21% for white investors at that age and 23% for Asian, right? And so that migration, I think, just might leave the system entirely if we're not careful to bridge these gaps, right, and figure out how to keep both of these very relational, right, sides of the market in existence and relevant for the next generation, as well as keeping the speed, agility, and convenience of fintech alive. So Chandra, I want to kick it over to you. Obviously, we keep talking about the speed and the scale that fintech brings, but the trust, right, like the regulatory pathways, the deep community ties is what sits at the seat of the CDFI industry. From where you sit, what are some of the strengths that cause clash among these two industries, but where do they also complement each other in the work that you do? And feel free to share any stories or examples as well.
For sure. So I would say for what I do, a lot of the times the clash can be, we do have to handhold with some of these entrepreneurs, right? I get a lot of people that are at ideation stage. So sometimes they may not be ready for that fintech model. It's a lot of the technical assistance that is needed to be able to pair with these entrepreneurs to get them to the next steps. And when we speak of the word of underserved, a lot of the times we think about minorities or we think about women, but a lot of times it's a startup. It's saying, okay, well, you know, business plan first, having that business banking account, understanding how those things work, and also, like you stated before, it's a trust component. It's also saying, do you trust me? A lot of the times, people have been denied because they've gone to certain, banks or different organizations, and they have not explained exactly why they can't get to the next step. And that's where a CDFI comes in, and sometimes that is a time-consuming and trusting process of saying, we're here to help and support. A lot of the times we have to get over the barrier of people even knowing what the CDFI is. I spend a lot of time just expressing, this is what we do, this is how we help the community, this is how we're here to support, and there have been so many people that have been, they've been taken advantage of. And so that's how we're able to get them to that next step. And so as far as just different experiences that I've had with clients, is just a lot of times those denials, and I always say delay, not denial, because it takes that conversation of how do we get to the next step. And I've had a great entrepreneur that I speak with that give them those different programs to help them get that support to be able to say, okay, this is where you are, these are the programs that will fit with you, and then talk them and walk them through that process so that if they do start, like you stated, our loans can be as low as $5,000. So these are very small incremental ways to be able to inject cash flow. But as you think about as you grow and scale, but like you stated earlier about understanding that sometimes they don't understand, like, hey, I didn't know that I needed to use my funding this way. I didn't understand the pathway to that. And that's how we do that long term so that they can get to that six-figure ask or get to that $1 million for their business to get them to those next steps and really look at the generational component of getting to wealth.
Can I piggyback on that? What I want to piggyback on is what you said is important, is getting them to grow. A lot of time, the benefit of being a fintech is giving them the speed of that information. In traditional banking, like you said, it's delayed. They'll tell you no, we're just going to tell you not now. And then you'll have that coaching piece of educating the business owners and educating the underserved community. Say, hey, let's get that $5,000 loan to be $15,000 next year by understanding how to add cash flow back into your business, how to add certain parameters to get your business to grow. So that's very true there.
So is there frustration there, like even among us in the industry, right? Is there this feeling of why are you moving so slow, right? Or do you just understand that in certain communities and demographics it has to be that way?
Yes.
Why are we moving so slow? Why are we moving so slow?
And then a lot of times people are already working out of desperation, right? They needed the money like yesterday, the day before yesterday. So now you come to me and I say, well, hold on. Are you quite ready? And then I'll say our process is not going to be as swift as a fintech.
And how many days or months does it usually take?
So I would say, and it's all at the speed of the client. And that's another thing for the lack of understanding that some people have about a process. I'll say it's at the speed of you. If you get your documents in, yes, we can get there. But that's another component of that understanding that we have to give them about this is what we need and this is why we need it. But it can take up to a month minimally sometimes to be able to get to that point of funding. And when you needed it yesterday, then we're at a very bad disposition, right? But then sometimes quickness is always not the best answer either, because then we have other components. We spoke about it earlier when you have MCA where they're charging exorbitant amount of rates, and now you say, oh yes, I got the funding, but now you're in massive debt. Is that really benefiting, and especially when we're talking about an underserved community, is that really truly benefiting your community by you being amassed in debt and now you're paying way more to be able to have that capital?
And so to contextualize this a bit, so let's say best case scenario, a client comes in, great documentation, great use case for the proceeds, right? What is the best case scenario on the CDFI side in terms of funding? Is it like 7 days? Is that
you said 7?
Usually the 7?
No, ours is going to be
best case.
Best case scenario. I did my quickest loan at 14 days.
Okay, so 14 days.
That's the best case scenario.
Got it. And on the fintech side, that's doing some lending, right? Best case scenario, documentation's all in a row. What is that time?
9 days.
9 days. Okay, got it.
But how much was your amount?
We did a $100,000 facility.
Got it.
But again, paperwork, the alignment, the use case, it was like the lining of the stars to get you 9 days, just to set the, like you said, set context. But I also think part of that is the technology piece. You're going into a portal, you're uploading our docs. The technology takes the data, it deciphers it, makes a decision.
Is that AI running it, or how you?
We have, yes, Lendistry has proprietary AI where it says, we take what your receivables are, what your deposits are, because we have tech in Plaid that looks at the deposits, persona that verifies ID. We make sure the person is the business owner. It spits out 2 offers. You may have, a few weeks ago, a government offer with an SBA product, and now a conventional product, but we'll talk about that after the fact. But that's the ability and speed of financial technology, because it's deciphering data that's given to us, not necessarily collecting all the data. It's just it's put in our portal, we interpret it, and then we see what offer we can give you.
Okay, and everyone out listening, if you have any questions, I'm actually going to point to you, and we'll make sure a mic gets to you so that you can ask questions of anyone on the stage, even if it's just for perspective or strategies they've used, et cetera. And as you all ideate and think on some questions, Sheena, quick question for you. Is there a specific example you can give on a project that just did not work out as you expected, as you think about kind of these cross-pollination partnerships, and what did you learn from that failure?
And working specifically with the CDFI?
Or a banking type construct?
So they're different. So working with some of the larger banks, they just like to throw away money, and they don't put it in places that I would argue they should put it in. So an example would be we were working with one of the big 5, and I remember sitting in the office. This is in Charlotte, North Carolina, and they was like, "Yeah, we just finished a product. We spent about $60 million on it, but we just finished it up and realized that it's probably not the best thing." So it's like, you just shelved $60 million, but you won't invest that same $60 million into something else. JP Morgan's another one. Also, I actually love JP Morgan as far as what they do for entrepreneurs. However, when we talk about the other side, I have an argument across the board of all the top 5, probably top 10. I have an argument that the problem with fintechs and CDFIs, particularly when it comes to the ones above us, the big 10 per se, big 5, I think they will never invest for us to make an actual change in the market. And I will stand on that. I think they would check mark the box to make it look good. They got the CRA credits. It looked really good. I made my investment of $1 million. I acquired what I can make my bank be better. But would I actually give you enough money to actually change it? We saw it even with Chime. We saw it with Cash App. Capital One came back and was like, "Oh, we got to change the way we do overdraft fees." Here's Wells Fargo. "Oh, we got to change the way we do overdraft fees." Why? Because now Chime doesn't charge an overdraft fee. And it pissed them off. So will I give a CDFI enough money? Will I give a fintech enough money to actually make change? I will argue no. So that's my experience in working within the ladder of it.
That's rich, and some data came out about 2 months ago, I think it was, just at looking at the type of partnerships that fintechs are going for now to have that regulated kind of bank sitting under them holding the deposits. And interestingly enough, 46% of U.S. fintechs now partner with credit unions, like your smaller member-based, community-based banks, and only 16% now are partnering with these big banks, these top 5s, and that's down from 32% last year. And so there is this big shift in, I think I would call it working with the willing, and not trying to convince somebody to care about communities they don't care about, but actually just partnering with the banks that are already there and already doing the work.
I think once we realize we need each other, fintechs have the speed, we have the VC dollars, quote unquote, but we also have the technology. The biggest issue with most CDFIs is they don't have the technology. It's like they have the trust because my dad's gonna walk inside of the credit union and talk to Susan because that's what he's known, but they don't have the technology. Like my local credit union still doesn't have a mobile app, and I'm just like, I will build you one, please, like let me help you out. So I think we actually need each other more than we give each other credit that we need each other.
Any questions from the audience? Okay, beautiful. We have one in the front. Can someone run a mic? We actually have 2 on this side. All right, that mic is coming.
My question. Can you hear me?
Yes.
Perfect. My question is, looking 20 to 10 years in the future, do you think we'll still need traditional financial institutions like banks? Or will Fintech or CDFIs completely renovate how financial services are delivered? Will banks be the dinosaur or the financial world?
I think banks will still be around because they're going to just keep buying up. What they'll do, they'll just keep acquiring. So anytime you see a fintech get big enough, they're going to get acquired unless they fight it off. And we've only seen maybe 2 or 3 get to the point where they were like, nope, I'm gonna stay away. I would say 90% of fintechs, once they get to a certain stage, somebody's gonna make that offer. It's gonna be that JP Morgan or Wills gonna make that offer. Because I always tell people, if you actually peel back the layers, the technology at the big banks actually sucks, like very archaic. So they're gonna continue to buy, technically yes, they're gonna continue to buy the fintechs because they're gonna use their technology to integrate to stay in the game. So I think fintechs don't have enough money to turn down all the acquisition dollars that's going to come. So banks are going to stay around because they have enough money to just keep acquiring and keep acquiring.
I'll piggyback on that. I agree. I think banks will always be around, even if we compare it to the residential lending space. We've seen a transition where people used to go to banks and then they went to brokers, right? And then you went to online companies like Rocket. I think that's where you're trying to see traditional banking go with fintechs and CDFIs. Lendistry is actually a pretty big fintech, 10 billion in the last 10 years. So I'm gonna use them as an example. As they continue to grow, we continue to innovate. But we also, like you mentioned, Casey, they start partnering up with other larger investors, other larger VCs, and hopefully that innovation will continue to grow that collaboration. But I think banks, as you mentioned, they always hold the wallet, so they can either buy, but I think as technology starts to change, maybe we'll see a different in trends.
I will actually say I'm scared that credit unions would disappear. Yes. I don't think the banks would disappear. I think my fear, the same way we have seen black banks and MDIs start to disappear, I'm scared we're going to see credit unions or community banks disappear, not banks and fintechs.
And my view is a little in opposition. I'm very optimistic as well. But in 1994, Bill Gates said, banking is necessary, banks are not. And I agree, right? And I think what's going to happen is somebody outside of the financial industry is going to unseat banks as incumbents for people who are marginalized today. So if you looked at what happened in Kenya in 2007, right? You had a cellular provider by the name of Safaricom that just decided to create mobile wallets, right? And here you are less than 20 years later, and 60% of Kenya's GDP runs through M-Pesa, a mobile money network, and not the traditional banking system. But the banks are still around, right? They just don't have the largest majority of the market share when you look at population. When you look at socioeconomic, right, statuses, that changes, right? But last week I heard AWS give a talk in Houston that said agentic models are the next wave of the financial revolution. And what they're saying is AI agents are going to talk to each other. You will not need humans, and in seconds, everything that's happening on banking rails today will happen through AI models. And AWS is not a bank, but they're already working to solve that problem. And so I think you're going to see some non-banking people actually unseat banks that are currently, just viewed as the only way to move money. But we'll see. Time will tell. Another question from the audience?
Check. Sorry about that. As we know, at least folks that are following along, that the Trump administration has just decimated the funding, the federal agencies that have overseen this for decades, really. I'd be kind of curious to hear your all's thoughts about, this is going to be a forced innovation, for these industries, right? This is not going to be a choice. What do you think are we know the threats, right? The money's going away, the federal oversight, the agencies. Where are the opportunity, paths through that, especially in where it's going to be, unfortunately, I don't like to say this, but it's going to be a little bit adapt or die within that.
So I'll say this. For my organization currently right now, I'm partnering with the organization called Cummins, and they have a strategic role in doing Cummins advocating for racial equity, where we're getting funding from them to be able to support people of color and Latino entrepreneurs. So it's building those partnerships to be able to keep those funds running in those hyper-specific communities. That's what matters, and I think that's how we're able to continue be able to do the work and keep those missions going. Because yes, you know, when we think about the federal funding, and yes, things are getting cut, but there's so many multi-billion-dollar companies that are still trying to align to make those changes in those communities. So it's about partnering with those people to be able to support and continue the progress that we've made.
I'll jump in. Good question. I think with the climate, and I'm saying this based on the current climate, as we're seeing the government shut down and start restricting programs, I think there are other growing corporations that might start developing new channels. As you mentioned, in Kenya and other countries, a lot of patterns are picked up. And you're seeing some organizations say, you know what, let me grow into this space. I'll use Amazon, you know, what Amazon was and what it's become. And I think we might see that in banking and lending space. You're going to see transition of other companies either investing into helping underserved communities to build them out a platform, and that with the shrinking of the government, as we're seeing in the domestic U.S., should open other channels and open other doors.
Yeah, I think one thing you said, though, part of it is going to be by force. Because you don't have a choice. And when your back is against the wall, like, you're going to figure out either I'm going to eat or I'm going to die. And I think we're going to figure out. You also have people, I think we see more donors now give out money in ways that we've never seen before. If anybody got Mackenzie Scott number, please, you know, make a connection on my behalf, because I'm very open to having a conversation. But I think we're seeing donors give out money in ways we've never seen before. And I think numbers prove that the middle class in America is shrinking. And so with that happening, I think donors will start to look at where and how they're going to put their money in different ways. Where it used to be like, the middle class would be okay, we're going to talk about underserved. Underserved could be a lot more people than it was today, than it was yesterday. So I think the shift will change the donors who also give money.
And I think everything they're saying, Chandra, Sheena, as well as Finzi, echoes exactly what I heard at the annual convening of CDFIs a couple of weeks ago. They're strategically looking at donor-advised funds, and they're asking the financial advisors to create a menu of nonprofits or CDFIs to give to, because it makes those folks who don't follow these organizations just easy to say, oh yeah, like, I like that, right? More CDFIs are becoming venture capital firms where they're investing in companies that can blitz scale, and from those returns, they invest it back, right? And so it's this regenerative loop of capital, and so many other, things that have honestly been around before the government started backing them in the last couple of decades. You had Bank of America get on stage and say, look, the CDFI portfolio is one of our best performing portfolios in the company. They said over the last 25 years, they've only lost 6 basis points. That's like less than 0.1% on their CDFI portfolio, because the trust really does create the social capital where people do pay back. And so I agree. I think they're going to be just fine. It's just alternative pathways. Any other questions? Yes.
I'm just curious because I've been, you mentioned young people going to Robinhood and alternate channels to investment. But one thing I've been reading a lot about is just a really fast growth in crypto-backed lending and even like crypto derivative packages, which sounds like subprime all over again. I'm wondering, are you seeing any of that market starting to impact your user segments? Are there any things that you're particularly watching or concerned about as crypto becomes not just this alternative intermediation channel, but something that is now leveraged and packaged in complex financial instruments?
I mean, we were talking about how companies now are starting to allow you to like borrow against your crypto. We've also seen, I think it's also become more popular. We saw football player OBJ take his whole salary in crypto. So I definitely think that we're seeing a shift where you would have asked me that question even maybe 2-3 years ago. I would have said, particularly for more of the marginalized community, it's very unfamiliar. There's still a lot of education needs to be done. Today, I think that is changing. I think people are saying, well, I don't even know if my dollar's worth $1 anymore, so I might as well put it into some crypto and take my chances. Whereas I don't think that was the case even probably 2 years ago. So I do think it is changing again. It is still an education component. Like, I don't think my dad's gonna be like, let me put some money into crypto. But when you're talking millennials and Gen Z, I think without question today versus even 2 years ago, we're like, yes, let me put some money into, let me learn more about crypto. Even if it's just basic Bitcoin. I ain't even got to get into like the Ethereum and the stable coins, like even the basic Bitcoin. Yes, let me try it.
I'll add to that. I think as lenders begin to understand how to use it as collateral, because that's a big piece of it, once there's an understanding of how they can use crypto as collateral, I think the market's going to open up. I can't say I've seen it in my sector yet, but obviously in a lot of circles that I'm in, there's a lot of conversation about, if it's a Bitcoin and Ethereum or what's the other one? Yeah, but some of the big ones, understanding how to collateralize them, because there's so much crypto. But after you see the Codebases and all these wallets, and as you mentioned, this new generation, that's where they're going for, and there's a traditional dollar. So I think you're definitely going to see more openings when it comes to that, when there's a better understanding about how to collateralize it.
Yeah, and I just say, I just got back to the States maybe 2 years ago, but when I was offshore, I was approached working for kind of these funds across sub-Saharan Africa. There's less regulation there, and so it's wide open. And I do think there's this risk for a subprime collapse, right? I was able to be a buffer and ask them very simple questions like, okay, like what happens if somebody tries to call that back early and the outstanding, they could not answer, they did not care, and they're like, do you want the money or not? In the States, there have been a lot more guardrails to keep that from happening, and so it's accelerating. Crypto lending is accelerating a lot more offshore, but I will say just recently, kind of to Sheena's point, this administration is in a little more favor of crypto, and so we just had the Genius Act that passed a couple of months ago, like in July, that is very favorable to more crypto activity. And right now in the Senate, there's this Clarity Act where it's looking to separate the governance between fiat currency and crypto. And so they're opening the doors for that kind of market, and we'll see. Any other questions? Oh, one back here, actually. Then
Okay, also relating back to Chris's question earlier, it's going back to how like the U.S. is going with the shutdown and everything right now. So given with the whole phasing out of the pennies, so meaning that everything's going to be rounded up to the nearest dollar at most stores right now, and it's going to signal like a major shift within the U.S. in cash usage. So when it comes to that, how is like AI-driven banking platforms moving fast right now, and how can fintechs and CDFIs partner to ensure that digital innovation can really like not accelerate to take out inclusion, and especially communicating for communities that still rely on cash for one of their main resources and traditional credit models?
Yeah, so I think, so artificial intelligence, when it comes to in the finance, I think we're still infant stage. Whereas we've seen AI do a lot in other areas, video, different parts of software. I actually think we're still very much trying to figure out in the finance space. Now, there's a community bank in Louisiana who recently tried to make all their tellers like more like an AI agent, and it just didn't work. They tried it. I think they're too early, by the way. I'm not saying it wouldn't work. I just think they're before their time. The clash I think is going to happen there is, you are right, pennies are fading, Gen Z's on their phone, everything is through Cash App or Zelle or whatever the case. The problem with CDFIs and MDIs or anything in that space, the trust factor usually came from human to relationships. So like my dad wants to talk to the seller. My dad wants to touch his money. Like his check can go in the bank, but he want to go take it out because he wants to feel the dollar. Artificial intelligence kind of takes all that away. Now, while there is a plus and a power to AI, I mean, I have my pros and cons on it, but there is a power to AI. But I do think the problem when it comes to the same way that ChatGPT just took away like legal advice and medical advice, I think there are just some industries that it's really hard to take the human component out of. Now, I think in 20 years, when our parents and our grandparents are not necessarily in charge of the money in that way, I think AI can be much more powerful in the world of finance. My opinion, I don't think we're going to see an acceleration or powerful piece of AI in finance in the next few years because it's still a very much human to human component. That's my opinion.
I absolutely agree with that, especially when like I stated, it's the clients that we are working with. It takes a one-on-one. I think that AI component is great for maybe like a slight overview, but not that in-depth conversation about your finances. Like they can just spew something simplistic, but to really dive into what you really need to do as far as to get yourself to that next step, I really know that that human component is needed for now, because like we have, you know, the age range is there, of course, and of course we have our Gen Z that are growing, and of course business is a huge component. But as far as the people that are looking for that lending opportunity and really trying to understand, I really know that the CDFI space with that component of the trust and understanding is going to be needed. But yeah, as we look into the future, I see a huge shift coming, but I think for at least the next maybe 5 to 10 years, we're still going to need that component of personalness about how can we help you, because it's a lot of stuff that is stated on your TikTok or your Instagram, and people come to me and say, oh, I could just do it without credit. Absolutely wrong. Please no TikTok University when it comes to finance.
TikTok University, come on now.
No, don't do it. Because
also, AI is very, you said, AI is very general for the
Right.
most part. Like I'm gonna ask you a question and,
right.
by the way, I don't know if y'all know this, but AI actually really gives you back the answer that you give it for the most part.
Exactly.
The output is only as great as the input. Well, sorry, the output is only as great as the input. The problem with the input is all the data doesn't match everybody. And money is very personalized. So like the money I can spend here in Mexico City is not gonna be the same money I'm gonna spend in Mississippi or in New York.
Or California.
In California. So AI for the most part, it gives you a very general answer. And the problem, particularly for those in the spaces of underserved areas, they don't have the data actually to make the AI work properly. So if most of my data for the big language models are coming from your big 20, the big 10, big 20, if there's no Chase in Mississippi and I answer a question about money, my output is going to be horrible because that input has nothing to do with my life here in Mississippi when it comes to money. So I do think it will work. I think it is opportunity between CDFIs and fintechs in the world. I just don't think we're going to be there quite yet because it's way too general and there's not enough input from those communities to give a great output.
And I'll just say, I think on the front end, there's a lot of trust and mistrust, right, that we haven't figured out. But I think there's a lot of potential even today on the back end, right, where I think AI is going to unseat FICO, honestly, right? AI can take behavioral analytics. Did you pay your water bill on time? Did you pay your cell phone bill? Like you're credit worthy, right? I think it is going to unseat, but the customer doesn't see that. They don't really know what went into the credit decisioning. Similarly, I just read a study that for PPP loans, that was kind of our government's response, monetary response to COVID-19, right? 50% of PPP loans that went to Black businesses came from online banks with no branches, right? And that is because the AI could just take these patterns and say like, okay, there was less subjectivity there. So I think on the back end, we'll probably move faster than the consumers ever see, but we'll see. Okay, so we are actually rapidly coming to the end of this amazing discussion, and I want to make sure that each of the panelists leave us with some wisdom. Don't rush through it, right? But some of your top thoughts around the final question that I have for each of you, and that is, what advice would you give to the next generation of fintech founders and CDFI leaders who want to work together from the start without repeating today's mistakes? Finzi, I want to start with you.
For me, what I would say is, what I'm seeing in my day-to-day is the data doesn't always tell the story, so there needs to be strong collaboration, strong relationships. We see a lot of business owners, just a small example is, you know, I'm depositing, I'm paying for daycare out of my business account, right? From an analytics standpoint, from technology, we're looking at that as an expense coming out of your account. So that's interpreted as a business expense. So the data doesn't always tell the full story when it comes to AI technology. And I think the human side of us is, if I missed a payment on something, it could be because, hey, my babysitter needed money early, or I had to help a family member out with a situation, so I had to move money. And again, from looking at the data, that doesn't always tell the story. So I think strong collaborations between the innovators, the tech folks, some of the banking folks, just to understand how to get those interpretations right.
That's good. Sheena?
Gosh, that was a good one. You should have went last, because that, you know, it's kind of hard to follow that. What was even the question at this point? I mean,
So what advice would you give the next generation of fintech founders and CDFI leaders around getting it right from the start?
I think not trying to do it the way it's always been done. I think we keep trying to, it's not, I won't say reinvent the wheel. You should not reinvent the wheel if it's rolling, let it roll. but I think we keep trying to just make adjustments to a system that's already broken. And it's never going to work that way. And so because fintechs can move fast, because CDFIs are way more in tune with the community, I think we have a much better opportunity to just build something new versus trying to just fix a broken system. It's never going to be fixed. So that's my advice.
I want to add to that. Embrace change. I think a lot of times we're always, like you said, it's a broken system. We know that. The space that we're in, we know that we're here because of the system being broken, right? So we're trying to serve a community of people that really don't understand, right? So we have to embrace the community and say, okay, we know that these are the people that we want to serve, but then also say that there's a change and a huge shift going on with technology, with how we think about money and how we feel. It's also a feeling component. I think a lot of times we're thinking that, oh, well, technology is everything, but when it comes to my money, I have a lot of feelings about that. And I need to make sure that I could talk to someone and understand them, but then also say, hey, I needed that money yesterday. Can you understand that and understand where I am in my journey? And I'm not just anybody else. I'm not just a number. I'm not just this. I am trying to really do generational wealth for my family and my livelihood, right? So to be able to bridge that gap, and if you're trying to start this and be in that space, to truly think about that, about how you're going to do impact, and you're only as smart as the people in the room, and collaboration is everything.
So rich, so rich. I have chills just listening to each of you. I echo everything that you say, and I would just say to the next generation, understand when marginalization is a feature of the system and not a failure of it, and decide what you're going to do about it, right? That's all we have, folks. Please give our lovely panelists a hand. Thank you so much.
Lost inside you. Is she living? Does she feel blue? Have you ever seen the sunshine?
So thank you so much. Embrace human connections, embrace the change and the capacity we can do some change in the world. So thank you so much for this insightful conversation. So it's time to refuel. Join us in the community hall. Then return for Jorge Ortiz at 2 p.m., who will share his vision for the future of payments in Mexico and why the 2026 World Cup might be a game changer. Nos vemos a las 2 de la tarde en este escenario para escuchar a Jorge Ortiz.
Damas y caballeros, les pedimos tomar.
Ladies and gentlemen, please take your seat.
So now for the next session, we'll be switching to Spanish, okay? So make sure you have your headsets on, please. And I want to take this opportunity to say thank you to our wonderful translation team. Our next keynote speaker is Jorge Ortiz. Jorge es un estratega en economía digital y es un referente en la industria fintech.
Economy and a reference in fintech industry and digital identity. It is the first president of Fintech Mexico because of the he was a key party in the creation of legislation about Fintech. He has been working with international agencies as European blockchain service infrastructure, blockchain and deep and OpenID Connect. He's a consultant, senior consultant, the Common Sense Project, where he fosters ethical innovation and strategic innovation of technology in society. Please feel welcome, Jorge.
Yo creo, ya, ¿no? Sale, corriente. Muchísimas gracias. Antes que nada, muchísimas gracias por...
First and foremost, thank you very much for your invitation and convince me to talk about the mischievous activity we are undertaking. This is the digital payment strategy, thinking that for the third time we'll be the host for the Football World Cup. I was convinced to put on this jacket. It's the first time I wear it. It's cool. So we have a song. If we think like if you were in a World Cup, this is what we will have in Mexico and visitors that will come to witness those games. You can dance, Beatriz, if you want. Okay, let's get started with this show. I'm Jorge Ortiz. I'm very happy and thankful for being here. So a lot has been said, and many of us have talked about financial inclusion and interoperability, but we must ask ourselves, because we are financial people or tech people, financial inclusion is only about financial institutions? What about if we involve more ecosystem stakeholders? I think that financial inclusion benefit us as a society, but it shouldn't be only a job of financial institution. The bank has to be in charge of it. This is how we see it. There are much more players, and for them it is essential because of business issues. So please think of other industries that can be involved to achieve the common goal we all have. So we can leverage the Football World Cup to foster financial inclusion. Yes or no? Are you sure? So you're all convinced, so there's no point like me being here. Okay, let me give you some data, and I'm still collecting them. It is expected that Mexico, only in Mexico, the economic revenue because of the tourists, and this is only on tourism. We're going to receive like 5 million tourists, and the economic revenue based on that is going to be $3 billion. So other data that I'm still consulting, it is all the consumption brands in Mexico will additionally invest $1,500 billion in promotions, in different contests, and so on. So it is a concentrated economic revenue in 6 weeks that the World Cup will last. It is huge. So why not we try to leverage all these economic revenues? We are not taking into account what people will spend in order to foster financial inclusion, because we have been concerned about this in Mexico for many years, and also digital payments. Now, talking about other industries, and this is only an example on how other industries also suffer because of the lack of financial inclusion, or because of the great amount of cash used in Mexico. There are different surveys, but around 86% of the payment less than 500 pesos, 86% is cash. And above 500 pesos, we are around 76, 75%. That is, Mexico lives in a cash economy. How this affects? I call it the bimbo problem, but this is a problem also of Coca-Cola, Sabritas, all the consumption brands, basically. So 70% of revenues have come from the moms and pops. I met a friend who has been working in Coca-Cola. You would think that Coca-Cola, the great revenue, comes from OXXO, 7-Eleven, Walmart, but around 70% of the revenue of consumption brands come from the small stores that are all over Mexico. Cash, they pay with cash. Cash is transported. Always we think about all the armored vans. No, the great cash transporters in Mexico are the consumption brands, are the ones that are taking the cash back and forth. And they told me this in Coca-Cola. Oftentimes, the implicit cost they have. Sometimes the truck is asking, do you need chips, or I don't have cash to pay you? Because in the morning, Bimbo, Coca came, and when the third vendor shows up, I do not have cash. So they have to leave the product without being charged, and then they have to come back on the following day to collect the money. So this increases all the cost of transportation. And I was talking to a friend that works in Unilever. So this is 4 or 5%. She was the CFO of Unilever. She's in charge of the monies. But I was asking her, how long, when do you find out that the product was distributed in a remote place in Veracruz, and in the corporation it takes you 5 days to find out. So the truck receives the cash, then it goes to the distribution center, deposited, then the armored van deposited in the closest bank, and then there's a cost of the cash and lack of visibility. And this is what happens today with the consumption industry in Mexico. Proposal. As this is not a presentation, I'm not going to give you a pitch. I'm just inviting you to add efforts and join all the ones that are interested in fostering digital payments, financial inclusion, restaurants, merchants, and to promote this with only one strategy. Let's forget the brands for now, or particular strategies. We can take advantage of the World Cup to have a uniform strategy, and then each brand, each consumption brand, each restaurant, each bank can do their own promotions. But imagine like a big campaign. In Mexico during the World Cup, everything will be paid digitally. This is a great opportunity we have, because when I was talking about this, like around the stadium, no, I'm thinking, to be honest, I'm from Veracruz state. If I had to omit like if I exclude Monterrey, Guadalajara, and Mexico, well, the country is much larger than those three. And when we have football in Veracruz, Veracruz does not work. So please take advantage to spread this out in the whole country. What is being done today, just for you to see the dynamics, today there are several dynamics running. So you will be part of the contest to go to the World Cup. In the World Cup, we will have dynamics. I will give you the T-shirt, and there will be a lot of exercises. So this is, for example, dynamics of from Unilever. It is buy a product, register, you upload your purchase ticket, and you participate. Something interesting that we see that almost all of them are using WhatsApp. In general, digital means to do this. So more or less, we have on how we know how to do these exercises when it comes to payments. If you want to see this live, okay, but if you win 2 tickets, please give me 1. Okay, so this is buy the product, register, and so on. So the data here, we have a big question that I want you to help me to solve, is how we can do when you buy a product or a Coca-Cola or a beer, snacks, what have you. When you register the product, and the brands know this through scanning a QR code, or what can we do so In this dynamic, we can guarantee that the product was paid with digitally. This is a proposal of innovation. So we analyze, you register, I want to participate, you register the product, and when you register, everything starts with a registry. Data, because we have talked about data sensitivity, and you are asked some details or register exact how they are in your voting card. And all the data you're requested to input, it is a CURP for the foreigners. It is basically our citizen, our Mexican registration that is used for almost always, and the government wants this to become to do anything in this country by a new law that has just been passed. So the registry, you can see it. I haven't bought anything in Unilever, and you input the ticket, and that's it. But here's a problem: the ticket. Okay, because I'm sure that in the remote store lost in the mountains of Veracruz, the world does not have a ticket. Well, we're just thinking that people buy in Oxxo or Walmart, but most of the small stores will not give you a ticket. So we need to find an alternative. And this is another kind of promotions that we have. We're showing that the big consumption brands will invest a lot. And those are initiatives that we have today, Colgate. Again, the details you are requested, basically your CURP. And we thought that with CURP, we can guarantee that the person made a digital payment. So this is an invitation for you all to launch it. And I think that you will have extra minutes for evasive questions. What's the dynamic about? You go to the store, and you go to the store, and you will see a glass, the bowl, the shirt. So I want this price. So basically, Mexicans, you're told, please put yourself like upside down, and you will do it. And you can take it. This is the basis. But in order for you to be given this, you have to digitally pay. It is no cash. Everything else plays. If the person in Mexico, according to the World Bank on fintechs, tells that in Mexico only 52% of the population is financially included. So I like to talk about the FinDES of the World Bank because it gives us a sample of the whole world, particularly that of Latin America and Mexico. The average in Latin America, same study, same methodology, is 70%. Mexico, 52%. Average in Latin America. I'm not talking about the most advanced country in Latin America. That could be Brazil, Chile, or Argentina. 52, Mexico, 70% average in Latin America. It's a brutal gap. And what can happen if I go to the store and I do not have a digital payment, so the store can suggest me to be given a card, or I recommend to download a wallet. You register in 1 minute, and you will be ready to participate. The payments can be done to be operational with a terminal, what have you, but avoiding cash payments. So I do believe that in order for people to win the prize, it's willing to make an additional effort. So we can have this as a financial inclusion that Mexico lacks. So after you register the product, and then the CURP, this is the unique code for Mexican citizens. This is just, if you have ideas, we will be really grateful. You cannot do anything in Mexico by law if you do not enter your unique code, CURP, in Mexico. All the ones with financial inclusion have a financial product with the CURP register. When I pay digitally, at least one institution, financial who, which provided the product, can endorse that I pay digitally. Jorge Ortiz with an account in Banamex, and Banamex through my court will know that I made a payment. So you do the digital, make the digital payment, you register the product. The dynamics in consumption companies, they use the same dynamics. In WhatsApp, they just have to add one more step. As they register the product, whatever, they register the corp, and the consumption company can verify with the participating banks that you made a digital payment. It will be automated with frictionless for the consumer. You verify the product, you pay digitally, you participate in the promotion, and you can win. So, Llave MX, you know, as Mexicans, that we have to use this, but this is in a new law. That there's two laws in Mexico that will rule. It was enacted on the 16th of October. We are just using this law, the general law of population, for the first time in history, created the physical identity document, which is mandatory. President says that it's not mandatory, but the law states that it's mandatory. And there's another law, which is law of elimination of proceedings, where the Llave MX was created and the digital citizen is created. Llave MX is the single sign-on for all the government platforms and all the private companies that offer a product or service that is digital, mandatory. That is, if I'm going to open an account, I will have to use my Llave MX. Well, this is the single ASON, but the base is the CURP. And since it is mandatory in Mexico to have the national ID document for any public or private proceeding, I think that for the World Cup, for sure, more than 100 million people will be using this. Well, or if you have your corp, you can use it and you register in this in the consumption brand. This is my friend Stefano, your logo. Alexa has one more fan because of the art. Why don't we unite and creating interoperational platform? We can use the Interledger protocol to integrate only one QR, for example, that can help us to process any type of payment with credit card or debit card and so on, our so-called CODI, which is the fast payments of Mexico that hasn't been able to kick off, and also the processing of all the wallets. If we only use a common protocol, instead of each one creating their own QR, we can design a QR that at least have these three payment modes: any type of cards, CODI, fast payments in Mexico, and other wallets that are ruled by Fintech law. 10 years ago, we have the dream that have a digital Mexico, and that's why Fintech law was created. So we don't have successful wallets. I don't see a Mexican UPI and let alone a PIX. But wallets specifically haven't been successful. Let's take advantage of the Football World Cup. And this is just an invitation to join. Basically, there are like progress. We have talks with Con Mexico, which is the largest consumption brand. We have had meetings. They like the project. Yesterday, I talked with a friend of mine who is in Bimbo, which thinks that this is spectacular. So I had the idea on my mind. I will try to move along with this. Well, I repeat, we are fed up about having WhatsApp groups. If you want to join and support, I presented this same project in the Ministry of the Economy at the federal level. On Friday, this will be presented to all the brands. So on Friday, I will have the opportunity to present this. And for the ones you have the value or you don't care. Okay, this is the Q&A session. Please feel free to ask. Comments, questions, critics. Can you hear me okay? So congratulations, I love this, I will join. But the Common Sense Project, Atwood, is this a specific project or how you can have, or it's one more project? This the financial inclusion. This is, Liz mentioned this yesterday, and basically those non-profitable organization, a little bit of common sense and a little bit of please, we want this to be fiscally regulated. This product is essential for financial inclusion. Theoretically, one of the barriers by which financial inclusion hasn't been successful in Mexico is because people do not want to be fiscalized because there are a lot of fees, and those are the top three. The fiscal regime, it is basically, there's many people in Mexico that to pay taxes will be a luxury. It is people that cannot meet ends and they barely bring food to their children. So if for them 1 peso less means not feeding one member of the family. So we are proposing that if you download a financial app, you become formal. When you do the KYC, you can tell the IRS, Mexican IRS, Jorge registered. It's basically the same process. You do not file your tax return, income tax return, and the thing is that you shouldn't pay taxes under that limit. You can bring more money to your family. We shouldn't take money away from the family just to a certain limit. So we can drop the crimes in Mexico in cash assaults in 90%. The cashless cities, this is a Visa study, 90% to drop the crimes, cash-based crimes. We can reduce criminal activities, economic impact, growth of GDP in 4%. But this is faster. But if you want to join, to read, and if you want to do it, well, please feel welcome. What else? Good evening. Well, what about accessibility for blind or deaf people? I think that this is a sector of the population that almost time they go unnoticed. And this represents a great section of the population. So what are the experiences regarding to increase the access of financial services for blind or deaf people, or they have a motor disability? So this, to me, this is unknown. I invite you to help us with this. I'm not, yes, for me this is unknown. There's institutions that do things like that. So please help us. Yes? Do you want to join us? Is it okay for you? Okay.
Sure, please.
So you mentioned that there will be 5 million people visiting for the World Cup, and you also mentioned there are new rules for KYC in Mexico with the llave and so on. How will that work for visitors? How will that work for people who don't have a CURP, people who are in the country temporarily? I was just curious how that would work, and how to integrate the money that tourists are bringing in with this new digital economy in Mexico.
Do you want me to answer in English or? I don't know if it's going to conflict. Hablo en español y. A ver, la gran mayoría de los.
Most of the tourists will pay with credit cards or debit cards. Something interesting that has just been announced by PayPal World. I don't know if you are familiar with this. PayPal partnered with PayPal, which are UPI and Mercado Pago. Those are the largest wallets in the world. They will reach half of the population of the world, and it will start in 2025, before the end of the year. And besides all the tourists, I want to think that most of them will have a debit or credit card, and probably we can launch the wallets. So here they will pay digitally, so we are one step forward. During the registration, we can create something. You can help us, Stefan. Well, it's going to be the CURP. I know how to verify this with any financial institution. I talked to the largest bank in Mexico and Unicornios, and they say that they will join. Abroad, we can leave the field open, like a social security number or the passport number, and you can register this. But the digital payment with foreigners, I'm not concerned, because they will travel with the digital payment mode.
We were just in Argentina, and one of the issues was that we wanted to order food on Rappi. And several restaurants required us to have an Argentinian national ID number. We literally could not order food without help from a local friend. So it's always important, because this is important money for the restaurants and the people here, so it's important to have both directions working. Paying, but also receiving for the local people.
I mean, we could work with a passport number, for instance, for visitors, or even though the passport numbers are not equal in any country. So it's so how do we verify that? But anyway, I'm more concerned about Mexican people that is not financially included, right? Ya se acabó. Ya voy. Gracias. Ya.
Muchas gracias, Jorge. Y bueno, wow. It was very amazing insights. And I'm really excited about digital payments and obviously the World Cup. Okay, so thank you so much, Jorge. And now for me, it's a real pleasure to welcome our keynote speaker, Maria Francis. Maria Francis brings over 2 decades of experience in the payments industry, with a strong focus on driving innovation, scale, and adoption in real-time payment systems. She was one of the founding product managers for the Unified Payment Interface at the National Payments Corporation of India, being part of the core team that conceptualized and launched UPI, a platform that was redefining India's digital payment ecosystem. Remains one of the most rewarding milestones in her career. So, welcome, Maria.
Can you hear me? I've got too many things to manage in my hand. The timekeeper just let me know for 30 minutes is what you need to speak. I might just go on and on. So, all right. That goes. Okay. She's given an introduction once again. Maria Francis, I manage the business development efforts for NPCI International, which is a subsidiary of NPCI. I'll quickly get into this. All right, before we get into UPI and we understand more about UPI, a quick way to recall about UPI, because I come far east. You have PIX here, you have SPAY in Mexico. So somewhere around the same idea is what UPI is. But I would say we launched first. So, okay, before, again, we get quick into UPI, it is a real-time payments platform of India. I think I'm here to say the India story. So for that, you need to just go a little in the past, how things have happened. Today, we are processing 20 billion transactions per month on UPI. Now, that did not happen overnight. It's an effort which has happened, I think, 15 years back. And that's not credit to NPCI, but many initiatives which has happened in the country. If you see on the screen, you see a couple of points which can actually allude to where we are today and why we are there. 80% population has got some way of banking access. That was not the case at least 20 years back. So we also have the same problems many of the developing countries have. And the government, and of course the country at large, with the regulator and many other people, the think tanks in the country, they worked on a very important thing which is called as Aadhaar. Aadhaar is a digital identity program. Now that actually is the foundation for most of the digital initiatives in the country. I want to just give an example, like quickly to understand the importance of Aadhaar. Let's say 20 years back, if a homeless on the road, if he had to open a bank account, that was not possible. Because the formal banking system would require an ID proof, all possible KYC documents, which a homeless on the road would not have. And this problem was identified because of a reason that the PM at that point of time made a statement where he said, I am sending across, let's say, $10 as subsidy to the citizen. However, by the time it reaches him, it might be 1/10 or maybe some point of what it is, or maybe he doesn't receive it at all. So how to solve this problem of the government wanting to help the citizen? The only way to do was giving it right in his hands. And the informal way, there'll be pilferage, corruption, and things would happen. The only way to give it is give it right into his account. That's where the need of accounts came in. So if I need to help a citizen, he should have a bank account. That's where Aadhaar came in. And what happened along with Aadhaar, there were a lot of regulatory changes. So what is the important thing which happened was the Aadhaar Act which came in, it provided, or the regulator changed the regulations, moved the regulations to enable anybody who has a bare minimum requirement, document, which is Aadhaar, he should be opened a bank account. Now, based on this in 2013, we had about 2 million accounts opened, 2 to 3 million accounts opened that point of time as an initiative under the Prime Minister. And these were also, Maria, who gets a salary, she has a bank account. But let's say somebody homeless, somebody in the third or fourth tier who doesn't have a bank account, this was a campaign by basis which they got an account. And I always tell mostly all of them is that what happened in our country is a beautiful orchestration of many people and stakeholders working together. It was not one UPI, it was not one NPCI, not one government. It is the banks, the ecosystem partners, the fintechs, the regulator, the government, of course us. All of them put together is what we see this 20 billion volumes today. So that initiative, in fact, that point of time, the government, the regulator, RBI, Reserve Bank of India, they given targets to banks that you have to go and open accounts for the less fortunate, and this was under the scheme. So these accounts might not be a fully functional accounts. It could be, zero balance, no frill accounts, because the kind of people using it will only have inwards coming in, and they will cash out. So accounts were there. That was established. Accounts citizens did have. We also went through a huge place where we were one of the largest country where you have, affordable, internet and mobile. We have got a good base of smartphones. So what you require for digital payments next is, of course, internet and smartphones. So these two also ticked in. You have an account, you have internet, and then you have UPI. All right? So this solved most of the problems. And one more important thing which happens, which is important for any economy, is that the median age of our country, just like maybe Mexico too, we are about 28, 29 years, which is very good number for adoption. So the youngsters adopt, and many of them, the adoption of digital payments is easier. Any questions? Oh, I'll take it last, sorry. All right, this slide is this is a 4-stack program which was thought the India stack, we call it. We have the presenceless layer, which is your digital identity program. We have the paperless layer is where you have Aadhaar, eKYC. You can do a KYC. So I don't remember the last time I walked into a branch. All right, I have UPI. If I need anything, maybe close a bank account, open a bank account, I can do it through KYC. So it's that simple. Only to close the bank account is one enters the bank. All right, you have digital locker. Digital locker is where, I give this example. Sometime back when I was passing out of maybe a 12th or graduation in my times, if I had to take an admission, I had to go with a barrage of certificates and stand in queue to take admissions. 3 years back, I went into my son's college admissions. And as mother being mother, I did carry all this barrage, and he was like all over the place, my son, saying that you don't have to carry. And I did not believe him. But when I entered, there was no queue, and I asked him why there is no queue. We didn't have to give anything in paper, because they asked us to deposit all the soft copy of the documents into this digital locker. So this digital locker is available. It is used for any kind of admissions. It can be used for hospitals. It can be used for any other purposes where all your documents can be saved herein, and this can be retrieved. So that's also a part of the program where you make it paperless. That's another initiative. Cashless is where we all said, all these platforms are run by NPCI. I'll get to it. We also have a consent layer program, which is like in 2019, the regulator started with it, and we call it the account aggregator framework. I'm not speaking much on this, so. All right, this is where NPCI is, National Payments Corporation of India, to which I belong. We are a not-for-profit organization. We came into existence as an act being passed in the parliament to create a dedicated entity to manage retail payments. Now, imagine this is a good thought at that point of time, way back in about 15 years back, the government had, because the regulator had the RTGS running. They had some kind of a batch processing NEFT, EFT program running. We had the cards, we had the visas, masters. Still, there was a need realized that you would require a dedicated entity managing retail payments. So that's well thought. We are not-for-profit, as I said. We have our shareholders are banks. For a very long time, we had banks as shareholders. But in 2020, we recalibrated to even include fintech. So we have few fintechs, if you see on this, some fintechs also on the board. That's NPCI for you. All right. What you see on this side are all the platforms which we run. All right. We have a card platform called RuPay. So this is as good as a Visa, Master. It's a scheme which we run. And it is accepted everywhere in the country. We are in the progress of partnerships to get international acceptance. We have a partnership with Discover, where in the co-brand arrangement, we can actually get accepted RuPay. We have Beam. Now, it's an interesting story because in 2016, the country went through a phase of demonetization. And of course, UPI was also the same time, 2016. While we had other apps, we have Google Pay, WhatsApp Pay, all the apps in the market today, then government realized that you really need to have something of our own, an app which can serve as a contingency, a citizen scale app for the country. Now, for a very long time, we are more B2B. All our platforms are B2B. We create platforms for the banks. Banks create services and products for merchants and consumers. But this is the only time, perhaps, we got into the B2C piece. This is an exception to the rule of us. But that was the mandate at that point of time. But it is running as a separate subsidiary in the country today under NPCI. We have IMPS. Before UPI, you had IMPS. It was a simple credit push mechanism. It was brilliant at that point of time, but back in 2010, we launched it. And it was good because until such time, if Maria had to make a payment to her mother in a different state, she could not send the payment on a Saturday, on a Sunday, or maybe after 6 p.m. because we didn't have something which was running 24/7. This platform was taken by storm because it was 24/7 available. So this is a precursor to UPI. We have something APS. I have a quick slide on it. I'll speak much afterwards on that. We have something called a *99 hash. It is a USSD-based platform, runs in 14 languages in the country. We are a large country with 28 plus states, so every state speaks different languages. So this is NPCI stands for inclusion. So given that, we had to also create something for we created UPI for smartphone users, we had to create something, like my father, he doesn't use a smartphone. He prefers, how many ever you give him, he still uses a feature phone. So we had a good sizable number of feature phone users. So this is a platform for the feature phone users. It is a menu-based panel, and you can do payments or push-pull payments as it is. You have the regular NACH, which is the ACH. I will talk about bill payment platform also on the next slide. We also have the CTS, and sometime I hope it stops, check clearing system. Yeah, more or less. OK. I was part of founding product manager for UPI. So I was part of NPCI at that point of time. In 2020, NPCI formed another subsidiary called as NPCI International Payments. And this actually came up with a thought process because many countries came to NPCI asking, learning, wanting to know about platforms. See, we run about 10 platforms for the country. Few of them mentioned. We also power the CBDC of the country. CBDC is, of course, central bank product, but the technology is NPCI. So there are a lot of people used to come to us to understand. At times, they did ask us, can we have these platforms? That's when NPCI thought, because we should have something for international. And backed by these achievements, we created NPCI with 2 remits. One being infrastructure build, and one is, of course, interoperability. Infrastructure build is more on the platforms which we have. We have, we have UPI, we have RuPay card stack, we have bill payment platform, we have AEPS, which is Aadhaar-enabled payments. You can do payments using your Aadhaar, a 11-digit Aadhaar, and your biometrics. That's more on this. Interoperability, of course, large country, 1.4 billion, and a lot of people do travel outside. A lot of people go for pleasure. People travel for work, send back money. The same discussions we had in the yesterday and today, remittances. So We are looking at integrating with like entities to create a corridor to ease remittances, and of course, create acceptance of UPI and RuPay for travelers who go beyond the country. That's a quick one. Okay, the last 5 years, 2020 is what NIPL was formed, 2025. We have done some brilliant job. We have had partnered with, for interoperability, we have partnered with UAE, Nepal, our neighbor, Bhutan is our neighbor, Sri Lanka is our neighbor. And we have recently, we have announced a partnership with PayPal, and so we will be accepted at all places where PayPal is there. They have something which created at PayPal World, so that partnership. On the infrastructure build, we have done 3. 2 in your region, which is Peru. Central Bank of Peru is creating a real-time payments platform, and they are using UPI to do that. That's the stack which we have given to them. Trinidad is also working towards it. Namibia, Central Bank of Namibia is working with UPI again. We have also given the domestic card scheme stack to UAE. So UAE has a card scheme which they built, they call it J1, and that's the card, the technology is RuPay. And of course, others are, let's see. So these are the, that's the instant payment. You have Central Bank of Peru, that's Namibia, and this is Trinidad. We have the UAE AEP. All right, let's come to UPI. Okay. 2016, we started. Humble beginnings with 13 banks. Today, as we speak, we have 686 members. Again, large country, a lot of banks. We are still adding everyone every day. We have 75 plus apps. Few of them, if you can see, Google Pay, WhatsApp Pay. PhonePe is a homegrown fintech, all right? We have Paytm, Amazon Pay. We have over 500 million consumers on UPI, 700 million merchants using QR codes. So these are only pure QR codes. So just like anybody wanting to have a taco on the road, we can have anything on the road there. And that's a way of life in India now. 20 billion transactions, as we said, every month we keep on breaking the same record. That's more of it. Our platform is capacitized to process billion transactions a day, and we are adding more resources to scale it up horizontally and vertically. 80% of the payments in India are UPI, done by UPI. And we almost about 50% of world's real-time market share. That's a quick tax. All right, this is not as complex as it looks, but this is just to tell you how the architecture is, open architecture, open banking. What we are seeing, there's 3 layers. These are 3 layers, so you can, if you have UPI, you might not need another payment for tomorrow, payment platform for tomorrow, because it's agnostic to the source of fund. When we started back in 2016, we started with savings and checking account. In 2019, we added wallets. So the regulator asked the wallets to get interoperable, because until such time, everybody had their own homes and all merchants and users. So the interoperability was brought into UPI. We have different purposes, e-rupee. This was a product launched in COVID, where government wanted to give subsidized vaccines. And if it gives credit into their account, they might just buy a bottle of brandy. Instead of that, to make sure that it is used for the intended purpose, they did e-rupee, which is like a QR code which comes to them. You can walk into a health center and show this. They would scan the QR code, and you can get the vaccine. You have offline payments on UPI. We don't have CBDC in India on UPI, but let's say tomorrow any country takes up UPI, they can just change the source of funds. So this platform can also have source of fund as CBDC or stable coins. These 2 are not on UPI in India. And it's agnostic to the channel. It could be mobile, branch, it could be third-party apps, however you want to design it. And the providers can be any. knowing that you have Pay and many other platforms in this region, I don't have to explain much on those functionalities, but push-pull payments, we do have. Payments in India are two-factor authenticated. It's a mandate by the regulator. So even if you have a card transaction, it has to be authenticated twice. So even UPI follows the two-factor authentication. We have pull payments. Pull payments as good as the best use case, my son uses it, okay? He needs pocket money, he needs something, I want to pay for football, I want to pay for this. He sends me a request, and I authorize and make a payment. It's that easy. And he uses WhatsApp specifically for it. Push payments, I make a payment to, let's say, Marilyn Monroe at the rate Scotiabank, that's me, let's say. So you don't have to send it to my account IFSC. You just need to put an alias and push the payment. It could be a mobile number also. And you have pull payments. That's a quick one. It's available 24/7, 365 days. We have, so 2016 to today, okay, the number and the value and the 20 billion transactions which we have today, it did not have an override. So we started with P2P payments, then we graduated to P2M payments. Then we had in 2016 Google coming in. Then we had other apps joining. So it's a gradual progression to what we see today. And of course, fintechs came in. These fintechs brought in a lot of use cases. There are a multitude of use cases which are working. UPI has a functionality of recurring payments also today. So if I need to subscribe on Netflix, I use UPI today. It is the way of life in India. We have QR-based payments. We have bill payments, biometric-based payments done on it. We have smartphones, feature phone payments, as I told you, CBDC is ready. We have all kinds of, we also have a functionality where we have one-time mandate. An interesting use case again. I'm 43-year-old. I still don't buy online because I do not trust online services, all right? Because many a time I have to sit at home and exchange these things. Maybe my son can do it, I cannot do it, all right? I go to work. So I prefer, the stuff coming home, and then we pay cash. And it's contrary to what I'm working, but yeah. So, so I'm a traditionalist, so I want to see, touch, and feel, unless I won't buy it. And given that, this is a challenge which I also faced. So this one-time mandate, what it does, it blocks fund, doesn't debit, blocks fund into your account, and then releases at receive. So the fintechs have taken a great use case. It's cash on delivery. So in cash on delivery, let's say I want to buy a set of teacups. I'm not sure of what I choose. I have this option. I can choose for pay on delivery. Let's say it debits $25 into my account. Doesn't debit, it blocks. I choose for this option. It blocks $25. Day 3, when the stuff comes to my doorstep, I'm very happy. There are two possibilities. Either I don't like it, I return it, or I accept it. If I accept it, amount is debited and credited to the merchant. If it is, it goes as return. Merchants like it because this whole hassle of refunds do not really come through. That actually helps this use case. You can apply this use case elsewhere also. We've applied this use case in IPO, initial public offering. It has actually brought a process which used to take 15 days, the broker community, from the day of IPO initiation till the day it is allotted. 15 days, that process has come back to 3 days. So it has actually brought a process improvement. And yeah, that's one-time mandate for you. Rest all, I think most of you all know the use cases. Just to bring you, we have rupee symbol on WhatsApp. All right, so this is the service my son uses profoundly. This is like to ask money, and I kind of send him money. And this is, if he asks, this is what I put, and then the processes remain the same as usual. We have had our faults in the last time, okay? We launched and we failed. There were system errors. There were days when everything sat down. We didn't have transactions, merchant colluded. A lot of things which we faced. One of the things which we also faced was we have given a rocket at the front end, with UPI. It's a rocket at the front end. But the after services, it follows a 7-day process of chargeback and, all these things. Somebody has to call the call center. So we also did the same things, all right? We also did the same thing. But we realized that if you're providing a rocket at the front end, we cannot give a bullet card at the back end. And given that is where we have this brilliant process wherein you can actually see the payments. We had times when payment is debited, person is not received, or merchant is not received, hassles and stuff like that. So this UI kind gives you the positioning of where you are. If it is so, it actually gives you some kind of assurance of, okay, wait, so this is a good case, but let's say in a bad case, it says, okay, let's wait, the money is coming to you. So the app gives an assurance to the company, there's somebody working at the back end, all right? He doesn't have to call a call center, money is gone kinds. So this is a good one which we did. And also in case of risk, fraud, chargebacks, you have a very good UI, and these are all mandated, all right? These are all mandated. While we have given the fintechs or the apps the power to innovate, we have few rules. I remember Roberto telling yesterday that he's creating policies, documents. So, we created a non-negotiable framework, that these are non-negotiables you need to have, because these are critical from the consumer perspective. If you need to drive adoption, you need to have all of this. I think I spoke, so as I told you, beautiful orchestration of multiple people working together. You have the switch operator, NPCI, regulator, banks, fintechs, great user interfaces, manage money options which are there. So these are things which has led us to this 20 billion transactions, which was not in a day. It has over the period of time. In fact, the very first design of UPI, and I was yesterday when the People's Clearing team was talking about it, that was their first. The first design of UPI only had technology providers. It was simple. The tech folks would look. Why should money become difficult? You just need to connect people. What is when you had banks coming through, because you have settlements, you have fund movements, you cannot give it in the hands of some people. That's where banks came in. So our architecture provides, for at any point of time, NPCI connects only to banks. So you have the role of PSP. I think they said something like PSI yesterday. There's a PSP role, which is taken up by banks. And let's say a fintech or a Google or a WhatsApp has to connect, they have to connect to the PSP. So it's a 4-party model, but when you expand, it might become a 6-party model, because you might have fintechs at the end. You're not coming to India, so this is what we have there. All right, so we have, for anything and everything, I start my day with a QR code, and I end it maybe for the QR code. That's when I reach home, taking a rickshaw, or maybe, coming home by cab. So this is for you in India. All right, coming back to the platform I spoke about, you have 3 minutes, okay? Platform is coming, bill payment platform. And this is a platform which, how do I explain? I think I'll to the next slide, which will explain things better. Any person, let's say regular Indian or a Mexican, let's say, will have at least 4 or 5 of these bills to be paying as a citizen, right? You will have electricity, LPG, water, some bills to be paid, monthly bill, daily bill, whatever it is. In India, I don't know how it works in Mexico, we have 28 plus states. Let's say 28 for the math. Now this 9 category, and each state has a water bill provider, state water bill provider, state LPG, electricity state. If you do the math, 9 into 28, okay? 9 bills into 28 states, you will have about 252 billers, all right? And if a fintech wants to provide, a bank wants to provide the solution, he will have to do 252 bills bilateral arrangements. This was a big problem in our country. It could be a problem for any other country who has such kind of a process. If it is only nationalized one bill, it should not be a problem. But if it's like province-wise in Mexico, maybe other places, this is a problem for anybody. Now, this platform is not for payments. This platform aggregates all the billers. And this problem was identified at least 10 years back by the regulator. And what it did was, it created this platform, and it aggregated all the billers. So today, let's say Maria Pay. I'm a fintech. I want to provide bill payment option. all I need to do is plug into Bharat bill payment system and consume the APIs. I get all these billers, which are about 22,000 billers today. All right, at one go, I do get it. And it's working beautifully in the country. It has solved for a lot of problems in the country. It actually solved for a very important problem because there was at that point of time an entity, all right, who was what monopolized the market. Okay, because there's one guy who was smart, he identified the problem, and he did this bilads very well. And at one point of time, it became so big and monopolized that nobody else could get into this business at all. All right, so it solved that problem, and that is what bill payment platform is. And this is what is one of the, other than UPI, we are providing bill payment platform. And payments can happen through anything. It can be UPI, card, wallet, any of those. So it's agnostic to the payment. It only aggregates billers, and it could be, we call it OUs. So the different agent mechanism. In third or fourth tier, there could be physically some villager coming and giving this and asking an agent to make a payment. Or it could be online, it could be API based. So I'm not going on all of this, but I'm hoping you understood what I meant. So this is a Bharat bill payment platform. And we are adding billers every day. It's extended to schools, hospitals, a lot of categories we are adding and moving it. RuPay card, no science. We know Visa, MasterCard is the same as that. What all these platforms give essentially is that a power of sovereignty. These are homegrown, built by NPCI. There is no dependency on any vendor which is beyond the country, okay? And you know the situations how we are right now. So for all these platforms, which I mentioned, 10 platforms, push come to shove a situation where we have any kind of anything which comes across, I don't have any dependency. My country would not suffer because these are all sovereign payment platforms. No dependency in a country or a provider. So it provides, when we give this to anybody, we give you the front end, back end, you can start running it on your own. So that's how, because we do not want to give, it's not a license-based model, it's one-time license-based model which we have. Yeah, this is an interesting platform, Aadhaar enabled. So if any country has this digital platform, as I spoke about Aadhaar, an example how it solved the problem is, quickly I'll tell you is, sorry again, large country. We have 28 states. We have tiers within. We have some tiers go to the extent of 7 tiers in the country. Now, let's say if you ask a bank, a villager wants to withdraw cash. He will not have it in his village, definitely a dispensing machine. He has to walk, maybe take some time, maybe take half a day leave and go and withdraw money to get access to cash. Now, this is a problem which is across for all villages which were there. And let's say you ask a bank to please go and deploy a ATM. ATM is a cost-intensive business. It requires an air conditioner, a real estate machine, some cases security. So it's cost-intensive. And if you ask some bank or financial institution to go and deploy an ATM terminal in the 7th tier, they would cringe, and not possible practically. This problem was again identified. Let's say the government is giving money, it's coming into his account, he wants to withdraw it. He has to take half day of leave and then travel to get the withdrawal of money. To solve this problem is where Aadhaar came into existence. So what they did, something like a mobile bank. Let's say you have a bank which is in the city. They could send an agent at a designated day. He would come to the village with maybe his whatever vehicle, and designated day he would say, and the villagers would queue in. All they need is their biometrics, which is themselves, fingerprint. They have the 11-digit number, and they use this platform to, it's just like a POS-like device you have. You just need to give this and withdraw money, all right? This person can be a bank personnel, or it can also become an agent, maybe a shopkeeper in the village. He gets a lot of cash, he wants to revolve that cash, he can become this agent and also become, roll his money. So this is a very successful model which is working in the country, in the villages. And the use cases are abundant for this. I have done. I did it, good job, all right? That's good one. I never managed to do this, but I'm glad. I can leave?
Thank you, Maria.
Thank you. Thank you very much. All right. Thank you to Interledger team for bringing UPI, to explain UPI in Mexico. Vinil, Chris, Anna, she's not here. All right, Anna, thank you very much for the opportunity.
Thank you. Okay, now we have space from the next panel, from classroom to Codebase, how universities cultivate the next generation of open payments. The moderator will be Smriti Parsira, and the panelists are Andrew Mangle, Alan Davids, Alexandra Ashima. So, welcome to the stage.
Come back to me. Come back to me. Come back to me. Come back to me.
Esta conversación se llevará a cabo en inglés. Si necesitan dispositivos de traducción, se encuentran en la parte posterior del escenario. And I'm going to do the introduction since we are setting up everything for the panel. So, this panel is about tomorrow's open payments talent is being trained today. Faculty from Interledger funded programs share how they are teaching ILP, APIs, and decentralized finance, blending theory with hands-on coding to prepare students to build the financial system of the future. So a warm welcome to our moderator and panelists. Thank you.
Kids are watching, so I have to say a phrase so they'll know that I know.
Oh, wow. Did you ever code?
What? Yeah, two. So this is them. My wife said I couldn't say that.
Okay, good afternoon, ladies and gentlemen. Thank you so much for joining us for this session. I hope you've stocked up on your coffee. This is going to be a masterclass with 3 academics here talking about their work. And really the interesting part is what has brought all of us here is, of course, Interledger's vision of trying to build in research and academia into their work program. Myself as a former ambassador, everyone here as recipients of higher education grant from Interledger. So what we could do, I thought we could roll off by just hearing from everyone, taking turns, just telling us very briefly as an introduction to how long they've been associated, the universities have been associated with the Interledger Foundation, and what is the kind of program that's going on. Starting with you, Dr. Andrew Mangle.
Salutations. My name is Dr. Andrew Mangle. I'm an associate professor of Management Information Systems in the College of Business at Bowie State University, Maryland's oldest historically black college and university, located closely, like about 15 minutes out of Washington, D.C. We've been with Interledger, partnering with them for almost right around 4 years, and we're focused on inclusive access and open payment systems. And we have a unique and ongoing progressing partnership. We've done a lot of opportunities in trying to engage other HBCUs. We're trying to enrich talent pipelines to bring new voices and perspectives into the fintech space. We've had over 700 touch points so that students who've had interactions with open payment systems and Interledgers through courses, guest speakers. Some of you here have been a guest speaker and interacted with them. We've done events, we've done FinTech sprints, we've done 3 Interledger summits, so thank you for inviting us back. And we're leading an effort to build an HBCU network. So we're one of many stops, and it's good to see other HBCUs here today. So thank you.
Thank you. Alexandra, as the latest entrant, as the next generation grantee, over to you to tell us a little bit about what you're doing.
Yes, absolutely. My name is Alexandra Ascherman. I'm a senior lecturer and a researcher at the Hague University of Applied Sciences in the Netherlands, and I'm also doing a research in the Center of Expertise of Digital Operations and Finance, and a research on new finance. So we are the latest addition to the educational side of the Interledger family. And the project which we are doing is basically a truly interdisciplinary pilot which we are daring to launch in our university in order to break the silos and make sure that the law, finance students are going to get together and then work on and learn about the open payments, about the Interledger protocol, about the challenges and benefits of what the protocol brings, and also to explore together and to make sure that they can see how they could potentially advance the financial inclusion. So just to tell you a little bit more about the Hague University, it is a truly applied science university. And the beauty of it is that our focus is on providing the education to prepare students to apply their knowledge to the real world. So what is actually happening is we are really hands-on. So we build something and we create a safe environment for the students to kind of practice and prepare themselves for what the real world has to offer. So with that, this is the project which we are having.
Thank you. Over to you.
Hi, everyone. My name is Alan Davids. I'm a senior lecturer at the University of Cape Town in South Africa, and I've been a grantee with Interledger since the beginning of last year. So I'm the director of the Financial Innovation Hub. The Hub is an interdisciplinary center at the university where we try to bring together economists, computer scientists, and engineers to really explore the intersection of finance and technology with a strong focus on financial inclusion. So we do many things at the Hub. I think the easiest way to think about this is sort of we've got 4 pillars: research, teaching, thought leadership, and innovation. I think for this panel, the teaching and the innovation pillars are going to be the most important. For the last 8 years, we've had a master's program in financial technology, which at the time was the first master's program of its kind on the African continent, and today still remains only one of 2 such programs on the continent. And the idea behind the degree was really to try to close the skills gap with respect to financial technology in South Africa, but also more so on the African continent as well. And we're very proud up to today to have had more than 60 students graduate through our program as well. What makes our program really special is that it's an interdisciplinary program, which means that students take coursework in economics, they take coursework in computer science and in data science as well. So really speaking to the diversity of FinTech. And it's really here in the education space where the partnership with Interledger has been really meaningful for us, because it's allowed us to be able to create coursework, create hackathons, have class projects where we're trying to expose students to the world of open payments, to the world of the Interledger protocol, to help students realize that this is a really viable tool to start using as they try to solve the day-to-day problems that many of them are facing in their communities. In addition to this education aim, we have a strong entrepreneurial focus. So we look to work with student startups at the university, so to give them support and to provide them sort of with an incubator space where we can hopefully get into the stage where they're able to raise funding. This is really important in the context of South Africa for 2 main reasons. The first being we have staggeringly high levels of youth unemployment. So South Africa has a youth unemployment rate of around 46%, the highest in the world. So we certainly need to create alternative pathways for students to find employment. We think sort of startups is one way. And secondly, we also believe that sort of startups and small businesses are really going to be the engine of economic growth on the continent. So we really are trying to encourage students to enter into that space.
Thank you. Thanks so much, Alan. Love the introductions, looking to dig deeper into this conversation. 3 academics from 3 different contexts, from 3 different continents. So maybe let's start with the thread that Alan started. Andrew, let me come to you with this idea of diversity and inclusion is so core to Interledger's values, and that really kind of connects with your university's value and its its history. So I'm sure that also raises some sort of unique challenges that come from your context, and how do you incorporate, your historical background as a university and take that forward into your curriculum development and, just the strategy of, teaching Interledger and open payments in your university?
Thank you. I just want to say we're all uniquely positioned, and I think we're a historically black college and university, and it makes us distinct in how we engage with our students. So we're often starting at a foundation, helping students move from basically apathy, trying to get them to self-efficacy, to get to engagement. But the big overall purpose is we want them to feel welcome and appreciated. And this is a relationship-focused effort. We're moving our our students who will be graduating. Sorry, I have 4 students here, 2 are graduating, and 2 will graduate. Maybe not this semester, but they will graduate soon, and they're on path to be on time. But they enter with limited exposure to this topic. We have limited finance, tech, and even global insight. So when they arrive on campus, so sort of carrying this deep personal insight of financial inclusion and not being part of the process, is particularly of interest to students and even our international students who come to our institution. This creates both a challenge and an opportunity. And I need your help as part of the Interledger community to help assist with this challenge, to help build curriculum, engagement, and I know I've engaged people in this room with micro internships to help students be part of the Interledger process, creating modules and models that help generate content, engagement, awareness. This means experiential learning, so Fintech sprints, hackathons, travel, this summit itself, to help connect students to these open payment opportunities and overall the global interoperability we're trying to create here today. BSU's approach is focused less on technical specifics at this moment. I know there's students that want more technical. I talked to one of the students here. They're like, why aren't we doing more technical? And I'm like, we will. But we're starting at more leading with empathy and relationship building. Creating that, again, self-efficacy, support, mentoring, and I think leadership that is necessary. And a primary role of leadership is providing focus. And that's one of the challenges, getting students focused on the outcome we're trying to achieve. We're building systems. So we transition from episodic engagement to now systems that support continuous engagement. So wherever the students are, we want to meet the students and help guide them the pathway to get them to basically these opportunities that are being presented today. I also want to say I'm a first-time main stager, and I appreciate this opportunity, and thank you for having me before I forget. But overall, I want to acknowledge that students are interested in this, but they first had to be made aware, and you have to provide the resources to them. It is each individual student is different, they have a different background, they have a different interest, and I believe every student, and we're inclusive, so we don't focus specifically on our College of Business or Information Systems, we want students to come in, be supportive, and that's everyone's responsibility in this room to help make that happen. And I think people have stepped up to that. Anytime there's been an ask, there's been great receptions for those, and that's been great for our campus, so thank you.
Wonderful, thank you. And I think, as we stick to this question of the context, Alan, do you want to add something from the South African context? Because there is, a lot to unpack there as well.
Yeah, most certainly. So I mean, South Africa, high inequality, developing country. So sort of thinking about topics like transformation is really important in the South African context, and certainly to try to close this inequality gap. And I think we often speak about financial inclusion, but it's important to remember that financial inclusion and the challenges that sort of brings about plays out across lines of socioeconomic status, of race, of gender, ethnicities. And I think there are sort of 2 things that I think follow from this. The first is an idea that's been spoken about a lot today and yesterday, that tech needs to meet people where they're at. So I think the idea is we need to build solutions that take into account the lived reality of people. But the second point that it's maybe sort of not been mentioned as much is that currently fintech and tech looks and sounds a certain way. And I think sort of universities have a responsibility to try to change what that sector looks like, so that we don't just sort of have representation in the sense that we have apps that are built for local people, but that we also have those apps being built by the people from those communities as well, because who better to understand that local context. So I certainly feel as sort of someone at a university that I've got a responsibility to try to enact that at a university level. So what we try to do, and this is where, again, where Interledger's support is very helpful through sort of offering bursaries to our students, but we try to admit aggressively with respect to socioeconomic, racial, and gender redress in the sector. So to give you an example, for our class next year, 70% of our students will come from historically disadvantaged backgrounds. 52% are women, despite the fact that only 38% of the application pool were women as well. So diversity is sort of really, really important to us, and I think sort of universities can and should be doing more to ensure that, you know, our programs and the people that are in our programs are diverse as well.
Thank you. That's a really powerful statistic. Thanks for sharing that. Alexandra, I'm going to come to you. You know, your program is interdisciplinary in nature. So tell us a little bit more about the design and why that's important. Like, why is it structured in this way? And are there challenges when you put together, you know, law school students, business students, finance students, and you want them to all study and speak the same language? What are the challenges there? And I will come to you, Alan, as well, because I know you're doing something very similar.
Well, with pleasure. I'm very enthusiastic about our project. And the reason is a lot of, like, I think throughout these 2 days, I've heard a number of times, like, the technology is there, but it is the policy and infrastructure which are missing. So I'm training lawyers and financial students, so those are the ones who potentially will be discussing the policies. But in order for them to do it effectively, what we need is for them to understand what they are talking about. And here is the beauty of the interdisciplinary project. I'm bringing the lawyers and the financial students who do not have experience in coding, and then I get them to understand not the abstract concepts, but really what exactly open payments can do. What are we talking about, or what opportunities and challenges they need to be thinking about when they are addressing it. And here is, of course, a challenge, because we are talking about the bachelor level students who have not been exposed to these kind of topics before. So the challenge is to get them to understand. And here also exists the market gap of the professionals who can understand the language of the developers, of the policymakers, and to get this all together. So we need these type of people in order to advance the policy and the regulations going forward. So we start from, like, onboarding them to what the topic is all about. So we start with a very structured approach. We have the workshops and practical sessions where we are going to introduce them to the Interledger protocol, to open payments, to the challenges and the benefits, and to also the regulatory framework in which the systems operate. And then this is exactly the time when we need them to get excited. And we are going to talk about that a bit later, I can imagine. But getting the students excited means to really tell the real stories. They don't respond to the regulatory texts or to the very abstract comments. But what they do need to understand is what exactly they are talking about, and to get the real stories. Like the one I saw today, like, try to transfer the money to Philippines. Like, this is something that we need to get. And we are going to do that with the help of internal experts, but I am also going to reach out to the Interledger community to get you, those of you passionate about all the topics, to kind of bring this to my classroom and to get the students excited about it. And that is step one. And then step two is to get them not only be excited, but in a true spirit of applied sciences, to now try to solve the real world problems, or at least try to get a little bit closer to advancing some of the issues. And that we want them to do and explore on their own. So what we are going to do, we are going to pair legal and finance students together, and then they are going to choose the angle they would want to do, and we at the faculty, we are going to coach them. They are going to choose their journey, we are going to guide them, and the whole idea is that at the end of the project, they are going to be able to pitch their solutions. And we created the area for that. So we have the pitch event, which happens every year. That is a student investment fund which we support. But also we have a conference, the annual conference, where they could come and they could really stand in front of the panel of experts and pitch their solutions. And hopefully we get really brilliant ideas out of it. So this is the vision we have. The challenges are, of course, the concept, how to get them in such a way across that they can really understand it, how to keep them engaged and fascinated. And I think that we try to address with letting them choose their own path. Let them, get to reflect on their own backgrounds and to see, like, okay, where do I want to apply that knowledge? And then hopefully really feel that they have enough of knowledge to actually take a little tiny step further to the road.
Thank you, thank you. Alan, do you want to add to that from the master's program that
Yeah.
you're designing and running?
Sure thing. So, I mean, Fintech's this amazing thing that brings together people from so many disciplines. I mean, probably looking across the audience here, there are lawyers, economists, computer scientists, engineers. And that, I think, is what makes Fintech really special. But good luck structuring that within a university where degrees are economics, computer science, stats, right? So in some sense, universities are very outdated with respect to the market that sort of they're trying to prepare students for, because universities operate in these sort of silos. So the approach we decided to take was to work really hard to convince a university to create an interdisciplinary master's. And I think this is really what makes our program really special, is this idea that students have a third of coursework in economics, a third in computer science, and a third in data science, which we think are sort of the necessary ingredients to be able to be successful in the fintech space. But that obviously really presents a challenge, right? Because you've now suddenly have computer science students who have no idea about economics, and within a year you've got to try to explain to them economics 101, but similarly, you'll have an economics student coming in who knows nothing about object-oriented programming, and you suddenly sort of have to take those students along for the journey as well. So that does create challenges. I think sort of, two ways that we try to address this. The first is through, I think, having very good support for our students. So one of our sort of specialists at the hub, Takunda, is in the audience. Takunda does a lot of amazing work sort of working specifically with students in some of the more technically advanced subjects. Takunda also came through the degree, so we're often sort of employing ex-students as sort of what we call technical specialists at the hub, so that we can sort of keep that expertise there. But we also sort of think that students that have come through our program are going to be best equipped to try to explain these complex concepts to sort of students coming in as well. So we're trying to leverage the expertise that the program is generating. But then secondly, I think we're relying on the fact that we have a very diverse classroom. So I spoke about sort of how our classroom is diverse across sort of gender and racial lines, but we also again have like a third of the students coming from computer science, a third from economics, a third from sort of other disciplines. So very often sort of different students find different parts of the coursework challenging. And as a result of that, we often find that sort of for the economics courses, it's really the economics students in sort of the program that are helping the computer science students. When it's time for the coding aspects, it's really the computer science students within the class that start to sort of help the other students as well. So I think we realize that we can't do everything ourselves, and I think we're really just trying to sort of leverage all of the expertise and synergies that get created when you sort of have a bunch of really bright and inspired young people in a room together.
So I know many of you touched on this thread, we are transitioning from what's happening into the classroom to this idea of learning by doing. And I want to come to each of you with that idea, because I think you've all brought out different perspectives. Andrew, you are here with your students, so this is a way of learning by doing. For them, it's an experiential idea. Do you want to just talk a little bit about what forums like this create in terms of exposure and how that really translates into kind of the practical experience for students?
I'm going off script, no more note cards. We're doing it live. It's a real challenge. I think one of the things it was mentioned earlier, and I want to tie something what Alan said, it's like students define themselves as majors. And that is extremely restrictive. And even in the fintech space, I know students exclude themselves when they hear the word fintech. We offer flyers for events, and I'm clearly like, everyone is welcome. And I avoid the word fintech. I'm sort of like digital financial inclusion, or I try and avoid words that would get people to not include, basically say, oh, I'm not that, or that's not for me. So keeping open, and then events that do engagement. I think this is one piece of the puzzle. And it's sort of I think of my role is to get as many people into the funnel as possible. And one way we've been able to do that, again, not just at Bowie State University, we try to reach out to other HBCUs. So we were last week at Fayetteville State University. We did a similar event I'm going to describe in a second. We were in Austin, Texas for Houston Tillotson, which is an HBCU out in Austin. We've been in the Atlanta University Consortium. There, Clark Atlanta, Spelman Morehouse. But the idea of like understanding the underbanked, understanding the challenges of cross-border payments, what it is to be an immigrant. So one of the things we ask students first to do in any of our programs is like interview someone who is excluded from this financial system and get them to have an awareness and gain empathy to it. So our events are clearly open to everyone, not major specific, and we lean into the idea of empathy. What is it like for other people who do not have the access you do? So our events lean into that, and then that spurs I guess, a million different pathways, each for individual student. And I think our roles, and we had like a pre-meeting before this for like an hour, just spitballing ideas. How can we work together? How can we make this happen? But this is a personal, one-to-one student relationship that we have to engage in, because everyone who, again, participates in Minds Empathy wants to go in a certain way, because they're not all computer science, economic statistics, insert whatever. So our events clearly have been like, what is the problem? Getting awareness of the problem and really empathizing with it, and then moving forward asking, how can they help? And then creating a value proposition that goes to their skill sets and really where they want to go. So our events have been clearly empathy, awareness, and how basically open payments can facilitate that process.
Perfect. Off script, but beautifully handled. Alan, do you want to talk a little bit about the hackathons that you've been doing? And
Yeah, so as much as I'm confident in our academic program and that what happens in the classroom is really high quality and students learn a lot from that, Fintech is really a sort of learning by doing kind of thing, right? So as much as we can try to sort of create these opportunities in the classroom, unless sort of students are out there building, breaking, disrupting, I think it's very difficult to convey that spirit of Fintech. So one way that we try to expose our students to what it is like to be in the Fintech space is through an annual hackathon that we host with Interledger, with the support of the tech team. They fly the tech team down for a week. And we have a program in sort of for 1 week during the mid-year holidays that we open up to students from our university, but also other universities in the city. So this year we had 4 different universities participate. Last year, Dr. Mangle flew down to Cape Town with some students, participated as well. And the idea is that sort of students come to us on a Monday knowing nothing about open payments, and we sort of ask them to spend the day with us Monday to Friday. And on the Saturday, we put them into a full-day hackathon. And this year we asked sort of students, put your hands up if this was your first hackathon, and I was maybe thinking it's going to be 50%. Everyone's hands went up, and then sort of we realized that, wow, this is for many students that are entering the Fintech space. They're in a master's program, they're about to sort of go to work, but they still haven't had this experience of a hackathon. So this program, this sort of hackathon is a really sort of great way for us to take students out of the classroom and get them into a space where they can apply the skills that they learn in the classroom. And I don't think I'm biased when I say this. Sabina's around, there are a few, I don't know if Alex is here, but they can attest to this. But the quality of the solutions being proposed by the students at these hackathons and developed, I would argue are better than a lot of the solutions I've seen at these summits, at the hackathons at these summits as well, right? And I think, again, that just speaks to sort of the energy, that speaks to the ability that exists in the classrooms, and I think sort of creating more of these opportunities where we really, I wouldn't say ask the minimum of students, but really set the bar really, really high and set it ambitiously high, but sort of meet them there with support, meet them there with encouragement. I think if we can create more of these platforms, I think students will surprise us with sort of the energy and the ability that they have.
Very true. Alessandra, anything you want to add to this idea of learning by doing?
Yes. One thing that I've really seen my students to struggle is, especially for the legal students, to kind of get their point across to the financial students or the students who took the blockchain minor, and just to try to talk about the regulations and all the important rules. Those do not care. So then when they see that on their faces, they're like, okay, so how do I get my point across? And that is actually really fascinating, because what we want to actually tell them is like, try, because in the real world you will not be surrounded by the lawyers. You will be in the team of people who will not really care about all the lengthy texts and memos that you've written, but you need to get your point across in the way that speaks to these other professionals with whom you work. I think that is something that the skill, which, okay, we are not breaking and doing something extraordinary, but we are training the people to speak the language of other professions and to kind of operate in that is a new world where there are the technologies, there are the people who develop, who break, who code, and also there are the people who kind of put them all and say, hey, but these are the rules, and these are the ways we can actually still do what you want. Not to tell them, no, you cannot do it, but this is the way you can take and be compliant with this, this, and that.
Thank you. And I actually want to give a shout out to the regulator's dilemma section, which is happening in parallel with this, which is exactly the kind of stuff, which should be taken to classrooms. I think the role play where, someone's acting as regulators, someone's acting as innovators and just trying to step into each other's shoes. But do not leave this session and go there. So with that, I want to kind of switch into the, the big elephant in the room or the hall, which is the role of AI in classrooms, happening both at the level of, AI used by students and how that's changing your assessment strategies, but also at a bigger level in terms of thinking about job opportunities for students, their, their future career pathways, and how are you incorporating that in your engagement with students? So open to whoever wants to start.
Okay, I guess that's me. Eyes,
We got
eyes
your
all-
back, Alan.
Eyes all looking at me. So our university recently sort of took the brave step of putting out a sort of AI teaching and learning policy, which is the sort of first policy, I think, of its kind, again, for any university in Africa. And it sort of really is this idea of not trying to work against AI, but trying to work with AI. So we recently banned AI, the use of AI detectors for submissions. And the university is really sort of pushing us to try to sort of rethink pedagogy, rethink assessment in the context of universities. And in many cases, I mean, this is still the first year of doing it, and this is sort of, AI has sort of accelerated at such a rapid pace. We're trying to play catch up in the classroom. But in many cases, it's sort of leading us to sort of go back to things that you maybe saw 10 to 20 years ago in the classroom. So, we're sort of seeing things like lecturers going back to things like oral exams. So sort of having students actually sort of make a physical submission, but then have like a 5 to 10 minute interview with them to be able to then interrogate them about this as well. So I think there can be sort of adjustments made in terms of techniques and sort of approaches, but I also think it presents us an opportunity to sort of, in a sense, like expect more of students. And if you think of sort of what the internet did for our ability to sort of create and sort of make things, I think AI has that same possibility, and we certainly all use it in a way that's productivity enhancing, but yet in a classroom we think of this as, oh no, keep this away. So I think sort of universities are going to be challenged to think a bit about how we incorporate AI in a way, I think, in a way that we can maybe start raising the expectations on students. So if you now suddenly have this tool that amplifies your level of productivity, why not now expect you to be able to develop an entire app in like a 3-week period? Maybe like last year it took you like 2 months to do this. Why can't we suddenly expect you to sort of do this in 3 weeks as well? So it's an evolving space. I don't think sort of, any academic has a great answer for this, but I think we definitely need to lean into this as opposed to trying to regulate it and keep it out. Because I think if we try to push AI out, I think we run the risk of disengaging students. And we certainly don't want to get into a space in 5 to 10 years' time where students go, oh, universities are these archaic institutions. I don't see any value in that. Universities need to keep up with the trends to stay a relevant sort of option for students as well.
Thank you. Alessandra, anything to add?
I recognize that, and thank you for reminding me that next week I have the whole week of oral assessments. That is also the path which we take, but only partially, because what we also do in the Hague University is we say, okay, it depends on what we want to test. So indeed, if we want to test the knowledge, then the oral assessments or like the closed book exams are still something that we are now seeing proliferating. But we also embrace the AI. And for example, in a number of courses that I'm teaching, what we say is like, this is the tool and it is going to stay. So what we are teaching our students is the critical thinking. So this is okay, you want to use ChatGPT, Perplexity, you name it, and you want to try to come up with a problem or the arguments, perfect, do that. But then read what the ChatGPT gave you and then try to critically see where the weak elements of it is and then ask it again and ask it again. So we are not against using the AI, but we find it very challenging to effectively integrate it in such a way that it's not the only step the student takes, but that the student interacts it and practices this skill of being critical, because this is exactly what they would need going forward. And that is kind of ties up to a big question which the students quite often ask me, is like, okay, but I'm now doing this and tomorrow my job will be replaced by AI. And I think by integrating the AI into our assessments, what we are trying to do is to show the students that, no, there is still the place for you. Like, it is still not perfect, it still has to grow. And if you have the skill to correctly interact with it, then don't worry, your job is not going to be replaced by AI, at least not in the foreseeable future. So that is the angle we are taking.
Can understand that dilemma. It is an uncertain time, certainly for students in this time. Andrew, anything you want to add to that?
Yeah, I was triple booked today, and one of the things I was supposed to go to is University of Sister Maryland had an AI summit, and some of these same things have been brought up, like the consultant management, the doing the live assessments. It's here, it's not going anywhere. I have two quick stories, one to put on my educator hat. We have this process called Bloom's taxonomy. Every educator in here knows what it is. It's remembering, understanding, applying. There's 3 more extra steps, but AI circumvents that. So we usually assess on what do students remember, what do they understand, what can they apply, and it does that. And now sort of generative AI flips it. Now students want hands-on, and then they want to be explained what it is because they don't understand it. So we've changed the education dynamic, and our assessments have not kept up pace with what students are looking for and the skills students need to succeed in the job market. And the job market, we talked about this beforehand, does not look good. We can say, is it AI influence or the economy, at least from the US? We can discuss that later on. But I want to acknowledge there is an impact there. So those are the 2 main pieces I want to bring up. The second piece I want to say that's important for AI is it has not kept pace with the movement of open payments and open systems. You have to be here to see how quickly things have changed and progressed. So my favorite thing is students ask me, I'm like, check ChatGPT with it. It's out of date. It doesn't get trained fast enough. And I'm like, you don't know what's going on, which helps me re-engage students. I was like, ChatGPT doesn't have all their answers. So this has been a great teaching tool for me to show generative AI is missing a lot, and it's missing this, and let me show you what's going on. So, and this summit has been helpful for me. I'll show them again. I'll show them the video to see there's more places to find information.
Yeah, thank you. So I guess as we, kind of reach the end of our session, I want to switch to reflection mode. And I want you all to just think a little bit about now, with the higher education grants being rolling for a couple of years. Andrew, you are like kind of the wise wizard of this club. So I'm going to start with you, come to you first. Where do you see opportunities for the universities to collaborate? Are there opportunities for knowledge exchange? Is that already happening? What can Interledger take back in terms of idea on what needs to happen?
I've been 4 years. I don't think that's really that old. Okay.
Interledger Foundation is 5.
5 years old, so I guess I wasn't as close to So long story short, I think the community and leveraging it. And I think we've talked about all our challenges and working together and building more people out and sharing resources. I think there are great resources that we have out, but there's a coordinated effort that we need to improve on. And I think someone talked about documentation yesterday. I was like, everyone loves documentation. But my point is that we just have resources available, sharing resources, and the biggest strength of Interledger overall is the community. And I think in particular, it's being able to contact people on Slack, asking questions, and if they don't know, getting it to other people, and providing resources to others. So when we were talking earlier as a group, and so like, we need this, I was like, well, who's gonna do it? Like, we gotta start doing this stuff. So I think there's also a reflection on us to do more, to pull stuff together and distribute it from the academic side, and that's where I think we can sort of fill some of the gaps of onboarding and helping each other out, because, Alan did a hackathon with my student and I were available, and they provided all these training resources, and I used them, and then basically sharing with others. And we, Bowie State University takes it to other campus, here are all resources. In case you reached out, like, we want to work together, like starting the communication, answering questions. Like, we want to get people exactly where we are so everyone keeps moving up. So you start basically with the 4 years of experience I have, day one when you enter.
Perfect. Alessandra, as the latest entrant into this club, what would you like to see?
Yeah, I want to be like Andrew when I grow up. Well, technically, what we really need, and I think that was that was really great that we had a talk, the three of us, because even though we come from 3 different continents, a lot of things we discussed, we really share. We have just the same concerns, the same challenges. So it is really, this visit for me was really brilliant because I could really feel that I'm not alone. And when you're designing a course, and especially piloting a course, and when you're trying to embed it into a curriculum across the faculties and looking into all the administrative nightmare and the amount of coffee you drink while you're trying to negotiate that, like, you feel at a certain point like, man, I need some inspiration, I need a little bit more of that passion, I need to learn how the others did it and how I can, you know, look at their ideas, see how I can integrate some of mine, and etc. So this exchange of ideas and experiences and like using each other as sparring partners, I think this would have been really great, and I'm pretty sure going to reach out to these 2 gentlemen and to Chris and Interledger Foundation team, because we really do need to learn from the experience you have already built in the last 4 years. And another thing, which is also very important, I think, is not only us connecting when we see each other, but also since the educational side of the family is growing, to kind of capitalize on that network. We all have our strengths. We cannot all do it all. So then we could also see how we could build those collaborations as the ones you've already tried. But maybe there are more other ideas which we haven't yet explored. And then see how we can really bring in all that in our respective continents.
Thank you. Alan, do you want to add something to it?
Yeah, I mean, I think maybe just to sort of a slightly different lens on this. For those of you that maybe aren't aware, I think it's sort of safe to say that sort of universities are, I think, globally in a bit of a precarious position. I think sort of firstly, what you see happening in the United States with sort of attacks on academic freedom, sort of seeing that trend elsewhere. So I think that's the one part. But secondly, universities and sort of generally funding towards higher education has generally flatlined globally. And this is sort of true, true everywhere. So as a result of this, universities are increasingly understaffed. You know, student intake is increasing, staff complements are staying the same. So in many cases, you know, grants like these come around, and even though, you know, there's money to be had, a lot of universities actually just don't apply, because even if they got the grant and had the money, they just wouldn't have the time to actually implement this grant as well. So in many cases, sort of like money doesn't always buy you the time. And I think as the Next Gen program starts to grow, I think there's a real opportunity to try to make sure that all those sort of like upfront fixed costs that, you know, may prohibit smaller universities from applying for these grants, we can hopefully start to sort of get rid of those fixed costs by leveraging on sort of all of our experiences and have like a fully fledged like onboarding kit that tells the university that no matter sort of how resource constrained you are, we're sort of able to help you get to the point that you have the resources to execute. So yeah, I think sort of we've all had many late nights sort of thinking about our programs, and to just try to sort of put that information to good use in some way.
Amazing. Yeah, I think the new generation of grantees will really gain from that. In the last couple of minutes that we have, you know, I want to just open the slate for you to just take a minute or two and reflect on your vision of what it would take to create, you know, the topic that we have with us, the next generation of people thinking and working on open payments. What's missing in getting to that ecosystem? Who needs to do what? Like, you know, the floor is yours. Maybe just go again in this order. Andrew, for you.
Hey,
You don't get a minute.
Exactly. I'll lead the way. Just run over top of me. End of the day, it can't be about each of us up here. We need systems that allow people, regardless of where they are, to join. And I think that kit isn't necessarily they have to go to higher education to get access to the kit. It should be open and accessible to everyone. And I think creating those onboards, like I know I'm in academia, but I was like, you can be in high school, you can be in middle school. I mean, I have 2 middle school daughters who said they're watching this instead of doing their homework. But the idea is like they should be able to learn more about this. And I think that's something we should, aspirational goal, that people should be able to join us and get onboarding quickly and providing resources that are inclusive and accessible.
Alexandra?
I think that for us, what is important is also to realize that there needs to be a shift in the mindset, that the topic which used to be niche is no longer a niche itself. So everybody needs to kind of already accept that reality, and I'm talking more about my students, which are legal, which are finance specialists, and that to understand that, okay, you cannot try to think about your future in the banking industry without kind of deepening into that topic. And that shift of a mindset is going to take a while, and I think by bringing in the real story, the use cases, the challenges, like to try to educate the new generation on like, okay, these are the things which are happening now and this is where we need the solutions, is really going to help that. And I really, that resonated with me a lot, what Andrew said, like making the resources available. We, in the Hague University, on a blockchain miner, we built a separate platform where we put our lectures just into the open access and we actually promote it across all the programs, because we think that if somebody has an interest in it, there should be an easy way to kind of get to it and to learn from the materials which we have already designed and we ran it.
Thank you, Alan. The vision and path.
Yeah, I certainly think sort of that universities and sort of higher education institutions are still going to have a really important role to play. I think of these institutions as like the connective tissue between industry, between research, and between policy. But I certainly think that sort of us on here and sort of you in the audience need to sort of expect more from universities and sort of challenge universities to keep up with the times. The fact that we have these siloed degrees and majors that don't allow any flexibility is really just a disservice to students. So I think we do need to challenge universities to do more firstly. But I also think that sort of, universities can't do this alone. So sort of partnerships are really important. Interledger being one, providing support to universities, but also being the custodians of technologies that we can sort of bring into the classroom and sort of make these sort of components of teaching as well. But I think regulators have an important role to play to create things like sandboxes at universities where students are able to sort of build and get regulatory advice. So I think sort of universities have often operated in a silo, but I think if we're really going to think of what a university looks like in the years to come, the university really, I hope, is going to become the center of that ecosystem. But that certainly is going to need a lot more support and collaboration from other entities out there.
Perfect, thank you. We still have 2 minutes. We cannot be the academics who didn't have enough to say. So again, I thought we would wrap with the vision, but I want to just come to slightly more personal question as educators and academics. You're all wearing multiple hats. You're educators, you're researchers, you're also project managers, you're fundraisers, you're mentors, you're doing many, many things. Just tell us a little bit about what that means. I don't think people from outside the academia get the challenge of what it is before you. So just reflect a little bit, tell us what that experience means.
We wanted to finish on a positive.
Not first this time.
Andrew's a bit traumatized, I think, from our discussion.
Alan first.
But yeah, it's one of these things, you study a PhD, you get to university and you go, I'm going to draw on a chalkboard and I'm going to write papers. Nope, you're going to project manage, you're going to fundraise, you're going to do all these things. And again, these are super rewarding things, but these are often skill sets that you're not sort of explicitly trained into, right? So again, to sort of bring Interledger into it, sort of having an ecosystem where we can like leverage support from outside of the university to maybe go, hey, I'm not the greatest project manager, but sort of a partner can come, oh, hey, we've got this like process in place to sort of be able to do things like that. But yeah, it is a challenge. And I think the role of an academic, is often greatly misunderstood. But yeah, maybe Andrew.
Oh, I just sit around pontificating most of the time. I don't know what's wrong. You two must be in the wrong spot. Come on over to Bowie State University. Most of my job is building relationships, and that's across the research spectrum, industry spectrum. But I mean, most fulfilling for me is, most of my job is building relationships with students, being accessible to students, trying to empathize with students. I want them to achieve their goals. Like, end of the day, like, I want them to live their best lives and help them get there as soon as possible. So that takes a lot of time, and I know I spend more time at work than I should. I know I have a family, but overall, like, that's most of my time, is just trying to listen to other people and try and help people be the best they can be.
Thank you. The last word to you, Alessandra.
I think I do what you do, but what I also have to do is to build connections within the university, because indeed we have a limited time, and indeed we have our students, we have our research, we have all sorts of other hats we are wearing. And then you want a project, and you want something that you didn't have. And that means that you do not really have anything ready. You need to start from scratch. And then you need to find those crazy people who are as crazy as you are, who can listen to you, and they will be like, hey, this is fun. I also want to be part of it. And I think this, to me, is something that is really important, to find those people within the university who could really collaborate and share your vision. It's like, let's do something fun, and let's do something that really is going to make the eyes of our students lighten, and that is something that we want to achieve.
Thank you. Right on time there. So thank you all for the excellent work you're doing. Thank you to the Interledger Foundation for supporting this work, and thank you for listening.
Okay, thank you so much for this reflection about academic and how to connect with the Interledger project. And I will say it like for me that I have the experience to be with the team in 4 different universities in Mexico and extend this impact to 40 different universities through the student hackathons run by Interledger in September. This reflection was amazing. Thank you for sharing that insight. So, welcome back. Thanks to joining us for our 4 p.m. session, Rights and Rails, How Philanthropy Link Access, Capacity, and Inclusion and Inclusive Payment Systems. Financial inclusion really starts with access and trust, and that's what this conversation is all about. We'll be exploring how philanthropy, open source infrastructure, and public interested tech can work together to build more inclusive payment system and close the digital equity gap for good. So we welcome the moderator, Chris Lawrence, and the panelists, Wilneida Negron, Amy Sample Ward, and Alpha Bruce. A warm welcome for the panelists.
Thank you. Welcome. First, let me say thank you for sticking it through. We're the last session of the day, and I hear rumors that there's a big party later on, so I appreciate the attention. So this is actually a good panel to be in because we're talking about raising money and philanthropy and what the intersections are here, so you might want to have your ears perk a little bit. I'm going to let these fine folks introduce themselves and their work, and I might ask, as you tell us your journey to this stage and your career so far in the organizations you work in, how do you define yourself within philanthropy? How do you see as your place in that ecosystem of funding and pushing projects forward? Wilneida? I think it's on. Here, trade me.
Okay. Hi, everyone. I'm Wilneida Negron, and I work with private capital and philanthropy around future of work issues, and also work very cross-sectorally with unions, with workers, basically thinking about how do we introduce the next generation of technologies that are going to enter industries in the workforce and center workers at the same time that private capital moves a lot faster, and philanthropy has an opportunity to create an opportunity to do responsible innovation while you're developing those tools. And I think that is sort of the philanthropic angle as well, is working with Silicon Valley venture capital and working with impact investors and / philanthropy in that space of thinking, how can we create an alternative, more public interest, innovation ecosystem that can create the future technologies, right? Because the incentive structures that I see when I work in Silicon Valley and with venture capital does not move very rapidly and does not leave a lot of time to consider the concerns and ideas that workers have across industries. And so that's sort of the angle that I bring.
Thank you. Amy?
Hi, everyone. We're going to dance later, so that's why this is the best session, right? Okay. Amy Sample Ward. I'm the CEO of a nonprofit organization called N10. It's just initials. We just say N10, which is an organization focused on supporting missions and movements using equitable and skillful technology. We don't talk about products, we don't recommend products. We honestly usually say that there are so few products actually built for the social impact that there aren't any to recommend. So I welcome that changing with folks in this room. But we're a global community of about 30,000 folks committed to a better world than this. And how I situate myself in philanthropy is a lot of things, I guess. N10 is a nonprofit, so we receive money from philanthropy. We are also an intermediary. We redistribute philanthropy's funds that they've given to us into cash awards directly for folks on the ground, building technology and building programs. I've previously worked in philanthropy as I worked in a foundation that was the lead investor in 2 different open source projects, so I was the liaison over that roadmap. And also, like, wish billionaires didn't exist. So also situate myself like that in philanthropy.
Hi, everyone. Thanks so much for the invite to be a part of this panel and this discussion. My name is Afua Bruce. I'm based in the DC area. I am a computer engineer by training and have spent the past decade and a half, just a long time, sorry, I just did the math, working on technology in the public interest. So working with government agencies, working with social enterprises, working in nonprofits. Right now, I lead A&B Advisory Group. We're a small consulting firm that advises organizations who care about responsible tech and data use. And so that's nonprofits, it's philanthropies. With philanthropies, I've done everything over the past couple of years, including helping them run grant challenges, educating them on how to upgrade their technology, make decisions about AI.
I was hoping we weren't going to talk about AI.
I know.
Give me one session, okay?
Maybe that's all. This is the only time AI
I didn't
will
have
come
it in
up.
the preset questions.
That's right. Yeah, Chris is doing the work here to not bring AI up.
Well, we'll see how many more times I bring it up on this panel.
That's fair. That's fair.
But yes, so do a lot of advising with philanthropies as to how to think about making sure that all of the organizations they support are thinking about technology well to really advance their missions and not technology as a standalone shiny object.
Thank you very much. And we've had a good amount of pre-discussion and questions, and I probably will throw most of them out. I also do want to hold time for a few questions at the end, probably, because you got the Ask the Funders panel to some degree. But Amy, I wanted to jump off with you because you had an interesting observation when we were chatting over lunch that you've engaged and you've been at the summit for 2 days, and the one thing that you haven't heard much is the data, and where does data sit in this, and where does data sit in these projects that Interledgers and others folks are funding in this open payment space?
Yes, I did say that. So just to step back a little bit, I assume that no one in here knows what N10 does, and that's totally fine. So I just want to explain one program area that we work in heavily is digital equity. And if you work in digital equity, you work in every aspect of life, because the internet is, for many things, now required or the assumed path, whether that's for making a doctor's appointment or checking or accessing the news or talking to your child's teacher, workforce development, education, all of these things are increasingly online, even if you are in an area that does not have service. The provider of those services is still telling you that they're accessible because they are online, even though you don't have a device or internet access or whatever, right? We understand this from here we are talking about financial literacy and access, but that's the same across all aspects of life. So working in digital equity, we often find ourselves supporting organizations who are trusted by and serving communities that are not online, building digital literacy programs, but they can't say, come to our digital literacy class, right? They say, come to this class about sending money to your family, or come to this class about talking to your children's teachers, right? So that the incentive, the value is clear of why you would come to this class or come to those services. And one of the biggest barriers that comes up in these classes across geographies, across community identities, is what's going to happen to my data? What data already exists about me online, and if I go on there, is that somehow my identity? So folks who've experienced any level of relationship to systems of incarceration do not want to have an online profile because they think that it comes with a banner that says like previously incarcerated, right? Because what we understand of our own data is quite limited, systemically, purposefully limited in our own understanding, but that prevents understanding or interest in, well, sure, let me just create this online neobank account, like what's happening right now, right? What do you know about me? What's getting tied to this? And what we also see come up a lot is, what am I inadvertently doing to make more vulnerable the person I'm sending money to? I maybe feel okay because I'm in this class and someone's kind of emotionally holding my hand and supporting me and helping me. But if I send money to Chris, oh my gosh, like does Chris know that I just maybe created some data trail on what this is, right? So there's just so much fear, and I think important fear, right? I'm not saying make that go away, but it's all wrapped up in data and what data is ours. How do we control that data? How do we see it? How do we move it? And how do we protect it?
So I want to kind of continue to build off that and throw this out to everybody. You know, especially with choosing what we fund or what we put our organizational resources in or what we point resources to, what is your kind of evolving understanding around this tension around having to protect people's rights online and data broadly, and the need for a broader financial inclusion and more interactions and more ways that money can move between? I mean, those two things can, not always, but can seem kind of diametrically opposed or be in at least tension. And so as we think about how we fund projects and how we think about how the projects that we fund become case studies and ways forward here, just how do we kind of navigate that tension? Afua, maybe I'll start with you there.
Sure. So one of the things I say often is that caring about people in this era, if you will, is caring about their data. I think often when we talk about different systems and different methods of communicating or ways of exchanging information, we think that we are just doing the thing, we're just doing entertainment, we're just doing finance. But it really is the data, people's individual data that they are trusting you with. Back to, I don't remember which panel of the day was talking about a trust dashboard, but it's part of that. But it's also how institutions use data to make decisions about people. And so I think especially in the finance space, as different organizations are working at what it means to bring more people into financial markets, there are a lot of different rating systems that are done with different data. So the question then is, what data is going into these algorithms? Who is making the algorithms? Who are they accountable to? How are they explainable? And what sort of bias has been embedded in that system, and what checks are regularly done to make sure that the tools are actually going to work in a way that they do sort of prioritize or preserve dignity of people in order to access these financial systems. So I think there are a couple of interesting projects that are taking place both at large scale. I know MasterCard Foundation has been doing some of this work for a while. There are also a number of smaller organizations that are operating on a much more local basis. I think of especially some projects in Kenya and Ghana and Rwanda right now that are really looking at what type of data can go into different tools to help determine and actually bring people into these financial systems.
I'm going to pass to you here, but I know with your work in labor and the future of work, this becomes even a more intense focus about the intersection of how do you pay people quicker, faster, easier, and where we see exploitation of workers happening writ large, globally and locally. How do you think about that interplay?
Yeah, before I go into specific apps or technology, just the broader context, I want to call out to industries, to sectors right now, the public interest technology field that is being built that includes the open source community. And I feel like those are very under-resourced fields that are trying to address what has emerged in the past 10 years with the platform economy, where people's data is locked into a particular platform. They don't have visibility into that. There's third-party usage that is not clear. And so I don't think philanthropy always knows. I can tell you, and other people can tell you here, that those fields are incredibly underfunded.
Agreed.
And they are, yeah, and this is public interest technology and open source community that can create systems of interoperability as well as dealing with like really critical social issues on the ground. And so jumping into the labor space, I, with other people looking at you, Aiden, have looked at hundreds of fintech products, again, coming not from the public interest or the open source, but coming from private capital, from venture capital, other institutional investors, sovereign wealth banks, et cetera. And I can tell you that the products, the fintech products entering the labor market are mimicking the similar kinds of platform, locking workers' data into the vendor agreements not being very visible, workers not being able to see, and most problematically, third-party usage of workers' data. So in the vendor agreement, they're collecting workers' data. They are providing, we do talk to workers, and some workers are very happy with a lot of these products. Some of them are earned wage access apps that, cash flow is a problem for workers right now all over the world, including the US, where I'm from. And so now there's a whole fintech set of apps entering the labor space that let workers access their paychecks in real time, or even earlier before like payroll is officially done. And we've talked to workers, and workers need that, and they're happy for that. When we do the digital forensics, when we look at the back end of that, we see that those vendors are charging hidden fees, that they are packaging that, aggregating that data and selling it to insurance companies. And so that becomes a regulatory conversation. California and the US has led that. They've actually, in terms of earned wage access apps, have created the beginning of regulatory structure, but that's not to say that it is, engaging in these new technologies. They're offering workers really useful things, but it is like, when you look at the bones, because they're coming, again, not from open source and public interest fields, they're actually can create new risks for workers, that workers are just like seeing the usefulness of it. And so that's a lot of what we're seeing. The other thing is, like, I'm sure that all of you know, traditional W-2 work, or kind of full-time salary work is on a decline, and gig work, informal economy, is where a lot of workers are either finding their only employment or supplementing their employment from part-time work. And a lot of what you see at those gig platforms, like, they are mimicking similar kind of platform. And when you talk to those gig workers, I'm sure in your countries there have been studies, but workers have been locked out for no reason. They have been penalized, and so the information asymmetry between workers and these fintech products that are intermediating, labor relations, is very disproportionate, and workers don't have the time, so they rely on researchers to, academic researchers to kind of do and policy advocates to come do the analytics of that. And so, you're seeing that not only with fintech products, but also like gig, informal economy products. And again, there's the last point I'll make is that there are kind of co-op version of these apps gig apps that are emerging. Like, workers are getting together and trying to create their own platforms to mediate, employment contracts and payroll, if they want to do a house cleaning business or do driving or taxi. But those, I go to Philanthropy all the time, and they don't have a strategy for that. It does not fit into them. And so these worker co-ops, they don't seem viable, or they can't scale, which is really problematic for Philanthropy to be speaking like that. But that's not to say that there's people are trying to create an alternative that is not so extractive, but meets that financial ease that people need. And it is just, I can't tell you the number of conversations that are just, Philanthropy is just not really
stepping up to the plate. So I want to build on what you're saying. Hard agree. And maybe bring it to the individual level, this human rights question that, yes, we can say and point to many examples of how the internet is just reflecting the inequities of our world. It's also massively accelerating their harms. And part of why we can't have a more equitable world is because of the tools that we are investing in. So happy to talk about that for days. But I think if we are to think about human rights and think about philanthropy or anyone else investing in technology and the internet, we have to decenter what have been the priorities of that investment and that development, which is capitalism, surveillance, militarism, colonialism, right? If we decenter, I would love to say eliminate, but I'll just say decenter those things. What are we actually recentering on? I always promote these three pieces because they create an individual impact lens instead of this obfuscated, kind of more generalized lens of values, and that is the internet. Any individual tool, any technological system should honor my sovereignty, my freedom, and my safety. And when you think about even an individual app, through those three priorities, there's like very few left, right? I have like one tab on my browser that meets that, right? Because at best, we sometimes see it meet some of those things for some people, or in very limited cases, like if you're just doing that piece. I want to give a shout back to yesterday's conversation about edge cases being where we prioritize our time instead of the norm case. So if we're thinking about human rights and technology and financial literacy, and we think about an individual person's sovereignty, they are choosing their identities that they want to share with you or don't, or retract them after they've changed them. We are thinking about their safety. We are proving to the session earlier, right? We are competing on how trustworthy our tools are, right? And if we think about freedom, we're saying also you can go wherever you want to go, right? Your money is yours. I hope folks in here know the quote, "Every border belies the violence of its maintenance," right? When we think about borders, we don't just think about geographical government borders, but when we add this layer of financial literacy, there are so many borders. How many charts have we seen across the stage? Those are borders, right? There is violence in the maintenance of those separations, and the more that we work together to minimize that and to allow an individual user the sovereignty and safety and freedom to move and live their life how they want, I think that's when we really rapidly change not just the internet, but the way that we use it.
Afua, I want to, kind of building off both of your colleagues up here, I saw you nod and get kind of excited about the fact that we haven't funded these open tech, open source communities, that we haven't.
Well, not really excited that we haven't.
Well, excited to comment. Excited to comment. But so that gap.
Outrage.
Right. What should we be doing? How should we be better funding public interest tech and the open source communities that often build them?
Yes, I have many, many, many thoughts on this, having worked in the public interest tech space specifically for years now, and worked with a lot of the key funders, or people who identify as key funders in the public interest tech space. And I think a couple of the things that I would like to see funders focus more on is helping take ideas from ideas to sustainable businesses. I think that funders could really help with de-risking the space, creating giving founders, giving innovators the time and space to actually have the conversations with community members, to have the conversations with workers, to say, what are your actual needs? What are we designing for? What does trust look like? And then to thoroughly test the systems, but also then to invest in building the infrastructure and building sustainable businesses. I got to work last year with one particular company that, with some funding from a particular founder, was able to start. They were started by academics, who are wonderful people. As we heard on the previous panel, getting a PhD in a particular field of study does not mean that you are also an expert at doing all of the things that you need to do to run a business. And so what this particular funder did was provide a year of support, not just finances, but the business consultants, the testing of the business plan, the convening power that funders often have to bring together people from across industries to really have a robust process of testing the idea, defining the market, and building and refining the products that would be offered. And then providing support also with some of the marketing. And so I think that's another way that we could be pushing philanthropy as well, to say, for all of these wonderful ideas that we have, and there truly are wonderful ideas that are out there right now, how do we accelerate them to that next phase? How do we take, again, innovators who have great ideas, some technologies that work, how do we take some of these ideas from hackathons, and what wraparound services, in addition to funding, because we know money makes the world go round, how do we take that and how do we actually make sure that we can create sustainable organizations, for-profit, nonprofit, whatever the tax status is?
Can I add to what Afu said?
Go for it.
Afu and I are very bad at self-promotion, as evidenced by neither of us mentioning this in our intros, but we wrote a whole book together on this topic. I guess it just took half an hour to mention. But if you want to hear longer form thoughts, The Tech That Comes Next is the book that Afu and I wrote together. But I just
about creating a more equitable world
with technology.
Yes.
We'll just read it together aloud or something for next year's summit. So I just wanted to build on what you were saying and add something that we talk a lot about in the book is like, we don't necessarily need funders making more accelerators. Like, idea to MVP in 6 weeks. There are fucking ideas everywhere, right? We need funders saying, wow, you have tried this 5 times. You are so much closer than you were on try 1. We're gonna fund you all the way to V8. Like, let's keep learning and iterating and building instead of, oh, that's so shiny. Oh, I just learned about this person. Oh, like, commit to time, commit to space, commit to that open generative learning process that is not 6 weeks to MVP, right? It is, I mean, that's what I loved about the documentary of the People's Clearinghouse yesterday, is it was not like, look how fast we did this, right? It was deep community, takes time and space and learning, and I just want to connect the dots back to the People's Clearinghouse because it's such a great example of you can't rush it, right? You really have to be with people in community and fund into that isn't a clean, like 6 people came out of the program. Or if, you know, it was like, we don't know where this is going and that's okay because the going is the point.
Yeah. No, I was actually going to ask you, Will, for lessons from Silicon Valley that might actually be applicable here. I'm not saying the Silicon Valley overall. But,
I was going to ask a similar question.
I think along the lines of, you know, being able to fail and move on and things like that. I know you've done a lot of work in that space, so really curious to hear from you.
She's taking over
Yeah, that's fine.
Okay.
I like being the most useless one.
I have such respect for both Will and Amy that I, too, have things I would like to hear from them.
Yeah, 2 things about 2 insights that are helpful from Silicon Valley. One is when you look at, I don't know if you guys have heard of YC Combinator, but it's, you know, you mentioned Accelerator, but it's one of the most successful. A lot of, you know, Airbnb and lots of big tech companies came from this little accelerator in Silicon Valley / powerhouse. And if you look at the mechanics of what they provide is like if you get a YC Combinator check, you get not only $500,000 of seed funding, but you get the seeing how YC Combinator works, you get access to networks of investors. You get access to your future co-founder. It's relational. It's that bubble. It's that closed bubble that people talk about Silicon Valley. We do not have that in the public interest side. There is no YC Combinator for people that are building open source tools, the place that will write you a $500,000 check, put you in cohorts, introduce you to investor networks that are going to help move you from seed to your next round, or from pre-seed to seed. And that doesn't exist. What we have is a completely fragmented space of different strategies and different technologies, and there's no coherence whatsoever. Even though like the people, us not in Silicon Valley, we're all, there's a lot of overlapping interests. If you were to map everything, it's just nobody is coordinating. Everyone is interested in a particular technology or a particular thing. And so that's one of the key learnings of the way Silicon Valley works. The other thing is, and this is where I'm going to mention AI, there's a lot of studies
Not
coming
just
out.
me, Amy.
Yeah, you bailed Afu out.
Yeah. There's a lot of investments going into AI and AI agents at the moment right now. I think anywhere $30 billion a year to these AI agents, chatbots that are going to be able to help us do our work. And what they're finding out already, and you may have seen already, the articles are getting a lot of attention, but it's not really helping people. It's, I think, AI slop is what's being called. And you go back to Silicon Valley, you go back to the insular nature of those founders, and you realize they didn't spend a lot of time talking to unions, talking to workers, embracing the complexity of what are labor markets and social issues and economic issues. And they're finding out, even with these billion-dollar investments, that their products are not that useful. And I think OpenAI co-founder just came out last week and admitted, and you can Google this, that AI agents are going to be still 10 years away. Okay, so a lot of founders in this bubble getting records amounts of investments, producing something that is minimal, if minimal to some, it varies, and they're not embraced. They're having to go back and be like, why is this technology not working? Why is this turning into AI slop? Oh, it's because we missed this whole thing that is called industry relations, that is called job market, political labor policies of a country or a local economy, because we missed all of these other data rights policies. Like, they missed a lot of it. And I'll say it's not every founder. There's a lot of, the third thing I will say is founders in those spaces want to build properly. They want to build responsibly. Not all of them, but there's a community of them that do. And so they do go back and they want to do the work and they want to get it right, even as there's pressure to grow. And so that is a lesson for philanthropy of, like, not only do we need a YC Combinator for open source, but we also need for those philanthropies and the perfect opportunity, because they can activate many types of capital, whether that's program-related investments or grants, mission-related investments. There's a lot of instruments, recoverable grants, revenue sharing agreements. There's a lot of capital instruments that can be used to not only build the technology and support the founder, but to deal with all of these other contextual issues that's going to make your technology actually useful.
All right, so I'm going to be selfish here for a second, Interledger selfish. We're still a relatively new foundation, I think 5 years old, as we've been saying many times over. And we all kind of realize that we're living in a world of, hellscape of unintended consequences from technology in general. I'd love to hear what advice that you would have for us. You've gotten to know us a little bit through being here and engaging, probably started with the who the hell are you when you got the invitation to join us. You see what we're trying to build from a philanthropic perspective. What are the advices that you'd have for us, and how do you steer us away from those unintended consequences of what we're building and funding?
Amy looked at me because I push back often on the phrase unintended consequences when we talk about technology, because the unintended consequences are the same. Every time, with every iteration of technology, it is always, we forgot to think about the edge cases, we forgot to think about black and brown people, we forgot to think about women, we forgot to think about people who were differently abled. We just didn't consider them, and now there are disparate impacts every single time. That is what we mean by unintended consequences. And there are several different methodologies that can be done through testing, through community engagement, through engaging a diversity of people to really help mitigate some of these consequences.
And that's not to say, Chris, that Interledger has those.
Correct.
Your
No,
reference
yeah,
was
no
to
worries.
the world, and I would argue they were not unintended.
I have very
yes,
thick skin.
Yes, your references to the world. Yes, exactly. And so, because I actually think Interledger has done a lot of things really well, especially the intentional building of the community and building that diverse community and testing. I think even the conversations that we've had today tie to one of my big recommendations, which is to really think about what metrics there are for success. I was at an event earlier this year, and Katie Knight, who's the executive director of the Siegel Family Foundation, said something which I have been sitting with ever since, which is just users does not equal usefulness. And I think especially when we were talking technology, especially when we're in the fintech space, it's how many people are using our products, what's the dollar or how much money is being moved through the products. That is ultimately what we're solving for. And I'd say, let's think about what metrics we have around trust, what measures we have around dignity, what measures we have around true access to capital, to different resources, and solve for that versus sort of the easier metrics in the space around users and the amount of money that's being transferred through a platform.
I'll add two things to what Afua said. Anything Afua says, I always say yes and.
Thank you.
Be careful. So two things. One, I want to build on this comment about measurements. I'm really glad, so many people have been on the stage and talking about trust. Trust isn't necessarily what I would recommend as the metric because it's the precursor to allow any other metrics to happen, right? So without trust, we're not here. But trust doesn't need to be the thing we measure. I really advocate, and this is something we do in our program, so if it's something that you want to talk about, I'm happy to share our own lessons and experience in doing this. But we measure our program impacts and outcomes all across different digital programs around, do you feel that you have the confidence now? You get to decide for yourself what confidence means. And do you feel that you have the skills that you want? Those things can only happen if there was trust, right? Because otherwise you wouldn't engage. But if you don't have skills and confidence, you're not going to actually become a real user. You can't adopt a technology fully. You could have created an account one time and been a checkbox, right, on number of users. So that's one measure, comment. And then the other was about what the foundation can do. And I would love to see, well, I guess I would love to see myself have prepared for this question and have a more articulate answer. But
Sorry.
my attempt towards an articulate answer is I would love to see what it looks like to fund the full conditions under which financial tools are being used, right? Like, what does it look like to also fund into building up the commerce in that village? What does it look like to fund into the digital access and Wi-Fi or broadband of that village, right? Like, what does it look like to fund holistically, including the conditions that exist, not just for like the financial literacy or equity space, which is, of course, the focus, because I think really interesting, unplanned, kind of emergent ideas come from funding more holistically in that way.
Yeah, I would add, other than a lot of what I've mentioned, YC, Combinator, activate different capitals, patient capital, I would say, pursue the mission, not the strategy. And the reason why I say that is because there's a lot of technology. In the US, we are still trying to catch up to the last 15 years of innovation in terms of the political and the regulatory guardrails to support how quickly technology moves is much slower, especially if we want to make it a democratic process. And we're in the middle of making another big leap. Although there's a lot of snake oil in that, but we are making a big leap. And so technology is already getting ahead of mission and people and democracy and human values. And so it's not that we don't need to focus on technology, but we need to invest as much time and resources on the mission, on the people, on the broader context, so that that has an opportunity to not get eaten alive by technology that moves a lot faster. And so I would say is a focus on mission, on people, on the human aspects, the democratic process, just as much, if not more, or at least have a coherent strategy for that, and not just be solely tech-focused.
Thank you. We have about 6 minutes, and I'd love to honor the fact that we asked for questions at the beginning. So if anyone has a question, preferably a question, not one of those, this is more of a comment than a question scenarios. So questions preferred. Does anyone have a question for our guests? Stephanie, I think a microphone is walking your way.
Testing.
There
Does
you
it
go.
work? Great. I'm Stephanie Perrin, and I'm one of this year's Interledger ambassadors working on a privacy and human rights framework. And I appreciate what you were saying about the data. And I don't want to use the AI word, but
It's okay. I didn't mean to shame everyone.
you kind of have to, Oscar Gandy wrote 2 good books on this. One, Panoptic Sort, way back in '93, and then, I think it was '93, Coming to Terms with Chance in 2008, I think. He recommended something like an environmental protection agency where people could go and try to figure out how the downstream data poisoned their life. I'm thinking of your criminal who doesn't, ex-con, who took a plea bargain and will never work again in this terrible job environment, How do we help people when any one of these systems could be filtering that data downstream? And used to work in a data protection commissioner's office. Tracking that down and enforcing it is nearly impossible. The individual doesn't know what to complain about. So anyway, I won't go on, but that's my question. Is there a way to fund something that would look at this? Because I'm not holding my breath for the current administration to start a new environmental protection agency for data.
I'm going to go really quick and then let these 2 people who are smarter than me, and I always recommend be on a panel with people smarter than you. They'll have better answers, so I'll buy you some time. I think the toothpaste is out of the tube, honestly, in so many unfortunate, harmful, systemic ways. In a world where, to use what I said before, our sovereignty and our freedom and our safety was truly honored, if I had been that person you just said, right, took a plea bargain, has this on my record, I would still be able to navigate systems without the immense bias that at least the US criminal justice system, feeds into every day. That's not to say that I could never tell anyone that happened, but I wouldn't have to experience systemically blocked opportunities because of a data point, and I would know who has that data point, right? That's part of, I think, the toothpaste out of the tube is that the data is like gone. It's not mine. I don't even get to know who has it, let alone could I retract it or own it myself,
I mean, that's true. So I think part of your question is this something that can be funded? And I think, yes, it's certainly something that can be funded to study. I think that, in the US over the past maybe 2 years, there have been some interesting cases through the FTC about holding data brokers accountable for how they share information at that level. And so I think exploring that across the US, but also globally, I think could be really interesting questions. I think also, different countries are tackling data privacy issues in different ways. And so having really local solutions and local conversations about what data privacy, what data sovereignty means in different areas is really important as well. But also, I think back to what I said earlier, when we are explicitly designing technology in the public interest, this is something we should be thinking about. And so again, back to funding people who are already trying to do work in this space to be able to support them to have something sustainable. To Amy's point, some of this is toothpaste out of the tube. It is what it is. We have to think about what accountability systems look like, but also let's continue to build new tools.
Take us home.
Yeah, this is a long conversation, but I'll say quickly, you should, if you haven't already, definitely read up on how indigenous communities are reclaiming their data, especially the Maori community in New Zealand. There is a lot of indigenous-led efforts to create data trusts and other kind of secure data ownership rights that companies would have to pay to access. And so that is, there's a lot of really good indigenous communities, but other attempts to kind of collectivize your data and claim some ownership over it. Lots of movements around the world, big conversation. I talk to a lot of litigators. Actually have explored, are currently exploring, trying to get Philanthropy to invest in a strategic legal fund. So they're actually trying to fundraise with impact investors to be able to investigate and do class action lawsuits on data harms. And so there is a big, again, an absence of data protection and other things, and the fact that the genie's out of the bottle already. There isn't, I think if you talk to a lot of litigators in your country, there would be a lot of interest if there was a strategic impact legal fund that would litigate on behalf of workers or consumers, or children is another big issue, harms of data on children, and so an opportunity to fund things like that. And the last thing, and because I know we're at time, is that there's a lot of, this goes into sort of a lot of co-op models of these alternative businesses that are trying to design open source. Again, I don't want to say we need another accelerator because you already mentioned that, but there could be an ecosystem of people that are building, locally owned, locally controlled, interoperable, open source alternatives to these things. And so creating a fund to fund those things would be good as well, along with like the sticks, again, like class action lawsuits and litigation. So.
Well, I could sit here and talk to my panelists here for the rest of the afternoon, but we are out of time, and we're actually almost out of time for the summit. So please give them a round of applause. It's a lot of great information and insights.
here and listen to the talks and panels that happened on the listening lab. I hope you got to learn together in the learning space. And I sure as hell hope you got to see the products being shown off in the demo lab. I might be a bit biased, as you can imagine. So this year we're celebrating 10 years of Interledger. We're also celebrating 5 years of the Interledger Foundation. Last but not least, we are celebrating our first ever documentary. Raise your hands up if you've seen the People's Code yesterday. Oh yeah, everyone, that's very good, that's very good. So, speaking of firsts, this is also the first year that we've operated a wallet on the Interledger network. Our amazing team of developers took ownership of the code from Finboss, and they focused in the past year to expand it to be the Interledger wallet. We've migrated the license providers under the hood. We now have capabilities in the US, in Europe, in South Africa, and in Canada, thanks to our partners. We've migrated the existing users over to our new agreements, and we've added an extra layer of security this year with one-time payments. The team, I think, on Sunday, just before everybody started flying here, finished 3DS secure payments for cards. And now if you open an account on the Interledger wallet, you are fully compliant with 3DS secure. I think last year when we were talking about this might being a possibility, a bunch of people asked us to do mobile apps. And you know us, we listen to our community. So now we have apps on Android and iOS giving you a new native experience to accompany the web experience. We're not really done. As you saw with the demo, thank you, Vlad, for the demo, we still have to polish off some edges. We want to add push notifications next, not only because we saw push notifications in the PCH demo. I'm not saying that's why we're doing it, but we're doing it. Vlad doesn't know this, by the way, so he's learning what his roadmap looks like from the big stage. But we also want to be a fully connected node in the network, connect with every other wallet that is out there on Interledger. We want to add more currencies and more jurisdictions to be able to better support our users. PCH showed you a little demo at the end that said there was going to be a Rafiki instance in the US. Newsflash, we are the Rafiki instance in the US. So we're going to power remittances for PCH from the US, but we don't want to stop there. If you saw the GitHub demo today, they have those new shiny SEPA payment pointers. That was a special request because we would like to also power making transactions out of the Interledger wallet into every bank account in Europe. With each milestone, we want the Interledger wallet to become a global gateway for open payments. Oh, I almost forgot. We also have a new debit card powered by MasterCard. And as opposed to last year when I had to show it to you like this, because I wasn't allowed to show the MasterCard logo, I can speak publicly about it now. Yeah, woohoo. So we've worked so hard on interoperable payments. This is our debut into mainstream payments, into traditional payments. We've dipped our world into the plastic world by getting the ability to issue 5 million cards. You can go ahead and order them across the web and mobile applications of the Interledger wallet starting today. We actually tested out the feature, and this took about 2 days to arrive to Romania. Really curious to see how long it takes for the cards to get delivered to wherever you are after you leave the summit. Because we realized using traditional card networks with Interledger-enabled accounts didn't entirely remove fees. This year, we also built the foundations for what will become the Interledger card, built on an Interledger payment scheme. As you can see, we intentionally left it blank because we're hoping you all will help design and develop what goes on to this little piece of plastic that will be fully powered to Interledger, making end-to-end Interledger transactions possible. To do this, we had to build a whole team from the ground up. If you worked on cards, and you're here, round of applause for you, please. I know it wasn't easy. And the reason why it wasn't easy is because we had to develop our own chip for the cards to make Interledger fit in there. And we also had to implement the traditional card network's EMV flow to be compatible with traditional card payments. So as we're moving into certification, we will roll out additional card designs and give every ASC on the network the ability to be their own issuer. If you are not familiar with how these things go in the world today, if you have $250,000 and a guy at MasterCard, you maybe can issue your own cards. Now every Interledger network-enabled wallet could issue their own Interledger cards. So why would I carry 2 pieces of plastic in my pocket, though? So next year, we're actually going to do a little trick of magic and merge these into the same card. We are working with MasterCard on a dual chip design that would allow a MasterCard chip and an Interledger chip to live on the same piece of plastic, so you would have a dual payment method in your pocket. I'm not going to say this is the first time, but it's really exciting for us. Step by step, the Interledger card will connect the innovations of Interledger with the infrastructure of traditional finance. But because Interledger cards can't work without a POS, this year we've partnered with KaiOS. Sebastian, if you're in the room, please stand up. Thank you so much. So we've partnered with KaiOS to integrate Interledger payments into their new POS device. I hope you got a demo of the device. It's an affordable device that not only is a POS, but doubles as a phone, making it the perfect partnership to further our collective mission for financial inclusion. We implemented the EMV flow for both the cards and the POS and added all the necessary Rafiki integrations. If you're in the Rafiki demo, you probably heard them talk about multi-tenancy, because that is one of the features that we led with this year. But the cards and POS service are just as important as multi-tenancy, because it allows transactions on a piece of plastic to be connected directly into the Interledger network. To ensure full security, we developed secure signing, a key milestone towards compliance and trust into traditional networks. As we move to get our certification, we need to develop the new EMV C8 kernel, which would allow us to pass level 2 certification, allowing us to integrate with even more POS manufacturers. That's how the Interledger protocol will move from prototype to scale, connecting the unconnected through open payments. Last but not least, we've made significant progress with webinization. If you've seen the website, it got a whole new look and feel. It's not a developer-first approach, it's a user-first approach. And for that, we've added extension updates to create new features to be available in all major browsers, including Safari. Speaking of browsers, we've integrated with Chromium, and we're ready for the browser makers. We're going next week to be in Tokyo at the World Wide Web Consortium's technical plenary gathering. That's a mouthful. To showcase our prototype and hopefully get approval to move into user testing on Chromium-based browsers. But webinization is a two-sided problem. The browsers and the extension address the users. You also have publishers that need to be able to put this into their websites. And for that, we released a whole new set of publisher tools, all aimed at making webinization easier to adopt and integrate for content creators. Speaking of publishers, we relaunched, revamped, revived Grant for the Web in a new format geared towards publishers. And the first 5 of them are already working on their integrations. Look out for the news section on the website to hear all about the first publishers who are going to have webinization-enabled experiences. Webinization as a whole is steadily evolving towards a unified standard, creating new opportunities for open and sustainable payments on the web. And now, before I go, I want to take a little moment to thank our CEO, Brianna Marbury, for her 5 years of leadership as we are celebrating the Interledger Foundation. She kindly shared the story of me creating a sticker for her. She was too polite to say it out on the big stage. I'm Romanian, so I'm going to say it. That sticker said, "Get shit done." because that phrase really is a good summary of a style, which is necessary when you're tackling global financial systems. It's her leadership, determination, and commitment to continuous improvement that have brought us to where we are today. I'm going to pause several times for applauses, don't worry. The Interledger Foundation is, without a doubt, a passionate community, and that's why I did that right there. We hold strong opinions, diverse perspectives, especially about how to best achieve our goals. I know we're not always easy to manage, except me. I'm the easiest to manage, I swear. But despite our differences, we are united by a shared belief in the power of Interledger to transform the world of payments and ultimately improve people's lives. At the center of that shared purpose is Brianna. She challenges and supports us to do the best work, not for ourselves, but for the people who deserve better, more affordable, and more financially inclusive systems. The summit is just one reflection of her leadership and vision, and let's be honest, her style. And I haven't even gotten to the Interledger part yet. You're in for a treat. So Brianna, on behalf of everyone at Interledger, at the foundation, and in our wider community, thank you. Thank you for your leadership. Thank you for your leadership, your passion, and your unwavering belief in what we can achieve together. Please join me on stage.
Okay, there we go. Thank you so much, Alex, for that lovely dedication. Thank you so much to the team. I started the summit saying that we were celebrating 5 years of ILF and 10 years of ILP. Sorry about that. And ending on a few reflections over the years here. I was looking at all these slides with Anna and getting emotional, and she said, "You can't cry because I'll cry," and so we both were really emotional. And I am not a crier, so. Before I go into all of the thank yous, I have to tell you about the legendary summit party, as Alex mentioned. That is starting today. You have to take this shuttle. I believe it goes at 6:30. But I just want to say thank you to this community. Thank you to all of you. There's lots of new faces in the crowd that I see today. And welcome to our community. I promise you're going to love it here. Thank you to the hospitality of Mexico City. Everyone has been just so welcoming, and I appreciate all of you. Thank you to MOOCs and all of the producers that you have seen that have come here, people whose lives we are trying to change. Thank you to PCH. How many of you used the app yesterday to buy something? Yeah, that was an amazing moment for me. I bought coffee. I don't drink coffee, but I still bought some. And this is my first time using Interledger in the last 5 years. I was so excited about that, and it was seamless. So Pedro and PCH team and all the students who turned into developers, thank you. I don't know if Pedro is here right now, but I'm tasking you with keeping Roberto on track next time, okay? Get him off the stage. Thank you to Anna Paula and Vanessa, the production crew. They made all of this happen and produced our documentary. Working with them has been like a dream. They're like a warm, comforting hug, and I just cherish working with them. And a big thanks to the ILF staff and honorary ILF staff, the Breakpoint team, who did an amazing job. You would be hard-pressed not to find one person on our team that brings you this amazing experience that is the Interledger Summit. So thank you for your commitment and dedication. You are so appreciated. Thank you to Anna, our everything extraordinaire. She is also, as Anna Paula said earlier, my codependent fashion stylist. And last but not least, thank you to Evan and Stefan. Working with them, you may have talked to them during the summits, during past summits, and I can attest, they are beautiful human beings. I am so lucky to work with you, and I thank you for entrusting us to bring your vision into fruition. So thank you. And remember, Stefan, it's not if, but when. Thank you.
All we have, it's little scare. We don't mind.
Okay, so a quick reminder, who's coming to the Interledger Summit party? You're gonna have to be louder than that. Who's coming to the Okay, that's what we need. So here are the details. If you would like to get on the shuttles, they'll be leaving at 6:30 from outside the Barcelona Hotel. And we have got shuttles from outside this venue to the hotel if you want to go and grab a drink. They'll be waiting there. And there will also be return shuttles back to Barcelona from 10, with the last one leaving at 12:30 for everyone who wants to stay and party a little bit longer. Okay. Oh, okay, and now, before we go, we're going to do a group photograph, so I'm going to invite our wonderful photographer Zoot to the stage. It's going to give you a little bit of direction. Maybe.